All right, guys. So today we got GDP data coming out. Let me know if the mic works. It should work. There you go. All right. All right, good. All right, guys. Yeah, today we got GDP data coming out. Very relevant day. We got GDP, jobless claims, new home sales all dropping this morning. All right, guys. All right. What's up, DJ, Dan, Kevin, Burge, Ricky, Jimmy, David, Supper, DS, uh, Mac. What's up, guys? All right, guys. So today, GDP data comes out. Very relevant data. Today, the GDP data is expected to come in at 2%. Uh, Jobless claims are also coming out today. Those are expected to show up at 248,000 for initial claims. Pending home sales are supposed to drop today. Those are supposed to come out at 0.5%. And so, again, let me know what you guys think. We're going to get a poll going live right now. We're also going to do a Twitter poll. We're also going to get a Twitter poll. Is FRC a buy? I don't know, man. There might. It's big risk, big reward. I don't know if I'm going to do it. Does GDP data come in higher or lower than expected today? It's going to be our poll: higher, lower, and then the third option is going to be as expected. Vote on that poll. We're also going to get some music playing here. What's up, Liv? Yeah, I don't know about FRC. We'll see. I mean, yeah, like I said, I really don't know. FRC, it's almost back up to 6, but I mean, kind of dragged the whole market down yesterday, to be honest here. Yeah, I mean, high risk, high reward is the best way I can describe that. I don't know how else to describe it, but like you're risking a lot taking those trades, but you could also make a lot too. Again, I'm not personally going to do it, I don't think, but completely up to you guys, of course. We'll see what happens. Spy all the way back up to 406. That's nice. Yeah, we're here early. I need to drink some coffee. We also have Caterpillar earnings at 6:30 in about 9 minutes. American Airlines at 7. AbbVie at 7:45. Crocs at 7. MasterCard at 8. Eli Lilly at 6:25 in about 4 minutes. Domino's at 7:30. Valero Energy at 6:35. Merck and Company at 6:30. Southwest Airlines at 6:45. Altria at 7. Peabody Energy at 8. Hertz at 7:30. Honeywell's at 6:30. Bristol Myers at 7. Hasbro at 6:30. Overstock.com at 6. Comcast at 7. Boo. Harley Davidson at 7. Hershey's at 645. Keurig at 630. That's about it. I mean, we got a whole gang of earnings today, man. This is like 50 earnings reports, maybe more today. So, and then this evening we got the big ones: Amazon, Snapchat, Intel, Pinterest, Cloudflare, U.S. Steel, T-Mobile. Today's a big one, you know. Hey, all good, Paul. But yeah. What's up, David? Yeah, it's a lot. I mean, none of them are huge companies this morning. The biggest companies on this report today, this morning specifically, are Caterpillar, American Airlines, Crocs, believe it or not, Eli Lilly, MasterCard, Domino's, Valero, Southwest. Those are the big ones this morning. But yeah, we got Caterpillar dropping in about 7 minutes. Eli Lilly at 6:25. And then Valero in about 13 minutes. Honeywell already dropped theirs. They came in better than expected EPS. I don't know what sales came in at, but I guess it didn't give. But yeah, GDP data. We'll get a timer going live. You got 2 hours and 5 minutes and 30 seconds. All right. But yeah, SPY gapping back up today, you know, getting help from Meta earnings. Meta absolutely destroyed earnings, did super well. Can GDP data really move markets? Yeah, sure, it can move markets. It's GDP data. GDP is a pretty big release. I mean, it's not like CPI level or anything, but it's big, you know, it's not small. I mean, we can look at the last releases to see. What's up, Beach? Oh, I can't even. It's so hard not to laugh at this. It's not the most PC thing to laugh about, but I can't even say what I'm laughing about. But Twitter sometimes. All right, guys. All right, guys. So yeah, look at FRC starting to get some legs back up this morning. All right, guys. So yes, GDP data, jobless claims data. Tomorrow we got PCE data. All right, so I'm reading Aaron's post this morning. Y'all can hear the music, right? Oh, coffee's good, guys. FRC pumping back up to 595. It's not a huge rib, but I mean, it's moving a little bit. That's good. Again, the only thing I bought yesterday was a little bit of Disney. And we are up today on that Disney trade. Not a ton, but, you know, we're green. So we'll give it time. I think we've established ourselves nicely. If we do get a bounce back today, you know, we'll be able to take some profit, most likely. All right, guys. So yeah, SPY up today, back up to 406. Again, I thought the pullback was kind of necessary. I wasn't necessarily rooting for buying up anything as we were at 410 plus. You know, I wasn't. People ask me all the time, "Hey, John, if you bought anything over the last couple weeks?" And I always said no because I mean, I really haven't. I just wasn't super confident in. I just wasn't super confident in buying up anything, you know. How long have I been trading? 6 years, maybe. Personal thoughts on GDP release. I mean, I think it'll be an interesting report because today, you know, today the market is fearing two things instead of just inflation or instead of just a recession. You know, with FRC's demise over the last day or two, the question really has to be from all traders is, what does the market really want to see with this GDP report? And again, I don't know. Again, I really don't know. I'm gonna do a Twitter thing here that you guys can respond to. All right. So as I'm saying on Twitter right now, all right, guys. So like I said, I'm posting this on Twitter. Heading into this GDP report, the main question I have is, what is the market fearing? Remember, if we are in a more recession-fearing market, something that this latest FRC crash could reignite, that means the market will most likely want to react positively to GDP and economical growth, and vice versa. So, like, and react poorly to economic and GDP weakness. Now, the other nuance to that is that if we're in an inflation-fearing market, all right, so again, we're going to do this poll. All right, guys. All right, so yeah, what is the market fearing today is the main question right now, in my opinion. Is it more so fearing inflation? Is it fearing a recession? And again, let me know what you guys think, but all right, so we're gonna get a poll going live. Inflation, recession, both is gonna be the options. Again, I'm gonna go with market's gonna react positively to economical growth, mostly because of the FRC demise that we've had over the last couple days. All right, guys. So we're gonna get this poll going live today. And again, vote on this poll. So this is a really interesting poll that we did on our Twitter right now. We're gonna put this up on screen so you can look at it if you want to see it. But again, going into the GDP report, market could be fearing both. Could be fearing purely a recession with the FRC stuff. Could be fearing inflation with inflation still well out of control. That's the main question we got today. Is what is the market fearing right now? And again, I don't know if you want to vote on this poll and kind of help us understand the sentiment right now. I think that can be helpful here. Here's the link if you want to check it out. Caterpillar beat. Yeah, sorry, guys. Yeah, so Caterpillar beat. We're going to cover these now. Caterpillar came in at 491 versus 378 expectational numbers here. Revenue of 15.9 billion. Versus 15.25 billion expected. Second quarter revenue growth was in line with normal seasonality. Here is the Caterpillar results. Yeah, we'll cover Lilly and Merck earnings too. And so Lilly and Merck, Southwest did worse than expected in terms of EPS, minus 27 versus minus 23 expected for EPS. Revenue of 5.71 versus expected 5.73. Planning on flight reductions in the second half of 23, most notably. There we go. Most notably in quarter four. Hasbro, first quarter adjusted EPS of 1 cent, profit expected 1 cent, revenue of $1. Revenue of 1 billion expected 880,000, or revenue of 1 million expected 880,000. Or expected 880 million, revenue of 1 billion. Sorry, Caterpillar again 491 versus 378. Merck came in at 140 versus 132, revenue of 14.49. Valero EPS didn't show what it was, but I don't see Eli Lilly yet. Let me check. Hold on. Lilly is LLY. It doesn't look like it's out with their numbers yet. We'll figure out what shows up. Hey, what's up, Grow? Yeah, y'all hit that like button, guys. Bump those like numbers up. Help me get over 100 likes before the opening bell. Yeah, so it looks like most votes on our Twitter poll regarding what is the market fearing currently is for both. 60% voted both. So very interesting here. Yeah, Caterpillar, let's look at it. Caterpillar popped up big on this, up to 223s, and it did beat on both metrics there for Cat. So yeah, Caterpillar did beat on both metrics here. Adjusted EPS 491 versus 288 a year ago. Consensus was 380. Revenue was up 17% to 15.9 billion. Beat the 15.1 billion consensus. We'll put these up on screen. Yeah, it was storming on my end. What's the weather like for you all? All right, guys. All right, guys. SPY still up there. You see Caterpillar. Again, we had like Valero. VLO is Valero. They're not really reacting too much here. In terms of the rest of the earnings coming out today, again, BBVA, CBRE, 92 adjusted EPS versus 86 estimates, so better than expected there. CBRE first quarter adjusted EPS of 92 cents beat the 86 cent estimate. Revenue of 7.41 billion beat the 7.09 billion estimate. Maintain their outlook for earnings. So that's what we're kind of in right now here, guys. Mostly, almost everything that I've seen this earnings release has beat expectations. And again, we'll put the Caterpillar numbers up on screen here. Yeah, that's kind of what I'm doing too, V. I mean, I bought a little bit of Disney yesterday. We're kind of sitting in it. I also bought some bank stocks that were sitting in green as well. Like I bought a Bank of America, Wells Fargo. I bought a little bit of that too, but Wells Fargo I'm flat on. Bank of America I'm green, and I'll probably take at least a little bit off now. No, I can't yet. I gotta wait. But yeah, I'm green on BAC here. So I did buy the dip in Bank of America, and I'll wait until I can trade it. Pretty big release today, though, guys. We got a lot of stuff coming out. Disney is under 100. Yeah, I mean, I just bought Disney, to be honest. I bought it yesterday. Average is right around 97, so we'll see. Again, looking at our Twitter poll, I'm curious to see what kind of votes we're going to get for this. Again, vote on that poll we did on Twitter yesterday. 33% think the market is fearing inflation. 17% think the market is fearing recession. 50% of the people think the market is fearing both. Music should be coming in good as well. Releases at 8:30. And then new home sales at 10. All right, guys. Earnings season's been fun though, man. We've been covering a lot of it. Again, today we've got a gang of stuff. Aside from we got Caterpillar, Eli Lilly, Valero dropping earnings this morning. We've got a gang of other earnings coming out, as well as Amazon this evening, Snapchat this evening, Intel this evening, Pinterest this evening. So this evening is the biggest release of the week. And it's not like, okay, so today we've got GDP data, jobless claims data, new home sales data coming out this morning. So we'll cover those datas on stream today, and we'll probably have thousands of people here, I'm guessing. At least 1 or 2,000 people here. And then, you know, we got new home sales at 10. And then this evening, again, we're going to be streaming. We're going to be streaming And this evening, we're going to be streaming Amazon, Pinterest, Intel, Snapchat earnings, a gang of earnings this evening too. And so we got some time, but the market is dropping a lot of stuff today. The market fell down, of course, yesterday, but basically rebounded all the way back because of Meta earnings. And so this is why, like, getting into that doom and gloom mindset every red day is just not something that experienced traders are generally going to do. One of the common things I see here regularly is that people are like, it's going to crash, and then we don't. And then just to kind of confirm that they were right or something, they say, oh, every time we get like a little 1 or 2% drop, which happens literally every week or two, we're going to get a 1 or 2% drop in the market. Like the market's going to have a couple red days every week or two, generally, not always, but like it's not a wild, crazy prediction to bet that the market's going to have a red couple days every few weeks. And again, I saw the same thing yesterday, doom and gloom. Oh, the market's done. See, I told you we would crash. And now we're back up to almost 407 this morning in pre-market. So the market has effectively rebounded all the way back up to yesterday's opening bell price. And still green, or is still, gapping up nicely in pre-market today. So again, we'll see if we get another rally. It's going to depend on a lot of the data that comes out today with GDP, jobless claims, new home sales, Amazon, Snapchat, Pinterest, Intel earnings all dropped this afternoon, as well as all the earnings that dropped this morning. And so it's just a big release day. A lot of stuff going on. Do you think Amazon will beat or miss? I really have no idea. We're going to stream it though. What was AAL earnings? AAL missed relative to a lot of the other ones. So American Airlines actually missed relative to a lot of the other ones here. Or no. Southwest missed. I don't know if AAL dropped theirs. American Airlines doesn't drop their earnings until 7. So we still got 11 minutes before American Airlines drops their numbers. Eli Lilly came out with 162 versus 173, revenue of 6.96 versus 6.86. Raised fiscal year revenue view. So they raised their guidance to a little bit, raised their EPS adjusted view for fiscal year, reaffirmed fiscal year GM view. So Eli Lilly, while they missed on EPS and they beat on sales, and they also had better than expected guidance, which I think is more important than EPS here. So Lilly is gapping up. Like I said, I thought we might. Even though we missed on EPS, the guidance numbers are what's dragging this one up. And so while they missed on EPS and they had good revenue, so mixed results for the conventional two metrics, they did better than expected with guidance on almost every metric here for guidance. So future projections are looking good for this. And yeah, we'll see what happens, to be honest. Here is Lily. What's up, Pawn? Good morning. American Airlines earnings call might be at 8:30, but the actual earnings for them drop in about 10 minutes. Do you think it's safe to buy Amazon before the close? Define safe. I mean, nothing's ever safe. I really have no idea what it's going to do. Just have good risk reward calculation and stop loss levels. And that's what I would do. Again, y'all give me a follow on Twitter at Beginner Trades. We're growing our Twitter. We broke 3,000 Twitter followers. We've been growing on Twitter. Like our tweets are getting anywhere between like 300 and 500 views a tweet. So we're growing a little bit on Twitter. You love to see it. Again, vote on the poll. Vote on the poll. Again, what I said this morning, this is the nuance of today's report. And again, vote on this poll. GDP data goes live. If we're in a more recession-fearing market, then the market will want to see higher economical and GDP growth, right? So if the market is more so fearing inflation, and this will be a really good test of what the market is fearing today with regards to GDP data coming out. So if the market is fearing a recession, which could be caused by the FRC craziness that we've had over the last couple of days, if the market is more so fearing a recession, then they want to see economical and GDP growth. They want GDP to come in higher than expected. Expected numbers are at 2%. And so if they are more so fearing a recession over inflation, then a number over 2% today will cause a positive response in markets, right? So their expectations for GDP are 2%. Last time it came in at 2.6%. So a little bit of dip in terms of GDP numbers relative to last time. But again, a lot of the time, the market has been reacting negatively to better than expected GDP growth over the last year, because the market has been more inflation fearing with prices going out of control over the last year. And so with all that said, this is going to be a really interesting test of what the market is fearing. And again, vote on the poll on Twitter if you want to, let your voice be heard a little bit. Again, if we're more so fearing a recession, the market's going to react positively to GDP data. If the market is still fearing inflation, which is certainly a possibility, the market very much could still be fearing inflation more than a recession. And if that's the case, then higher than expected GDP growth will cause a negative market response, and vice versa. A lower than expected GDP number will cause a positive response. And again, I'm not sure which way we're going to go here, but yeah, that's the nuance of today. And again, let me know what you guys think. Vote on that poll. AI seems to be the new hot technology. Yeah, I've been telling people, man. I had some people telling me that AI was just a gimmick. It was just a keyword. It was just it didn't actually mean anything, that it's been around for 20 years and that AI wasn't going to do anything. And again, I think time is kind of showing you guys, like, I'm not dumb. Like, I know what I'm talking about. Like, AI is obviously different now than it was 20 years ago. And that's a self-evident thing here. And so the point is that AI is going to change productivity as we know it. It's already changing a lot of different industries, specifically photography. Like my daughter and I were playing with, it's going to change editing, digital photography, digital editing services, photography editing services, logo creation. It's going to change a lot of industries. I was playing with an AI photo generator, and you can basically feed it input. You can basically say, hey, my kids and I were playing with it, like they would say stuff like, I want to see a orange poop or whatever. And they were just loving it because it would literally artificially, it would use AI to create these images that conventionally you would need like editors for. You need somebody to edit it and add this and kind of do some editing. At this point in time, you can say, hey, I want to see whatever. We did one where we said we want to see a snake eating a toilet. And you can choose what kind of photo you want, whether it's like, whether it's realistic, whether it's like art related, whether it's, logo related or whatever it is, and it spit one out. And so, yeah, really interesting technology. And again, it's going to change everything, and it already has to a certain extent, but it's going to change productivity. The biggest industries that are getting hit right now from it, like the big ones that are getting affected as we speak right now, are business photography. Like I can, like, again, I tried out a few different headshot services, so I tried out a couple, and a lot of them were really solid, to be honest. Like both of them were pretty good. Like the headshots that they gave me, and again, I never showed up in person. I never wore anything. They could have fixed my hair a little bit more, but that's all right. But like, this is a completely AI like picture. So this is an AI photograph. Like I did not dress up. I did not go sit anywhere. I did not pay a photographer to come to my home and take pictures. I literally sent them some selfies and they gave me this AI headshot. And they gave me about 50 of them for $20. And so that is the industry that is getting affected the most. Like conventional photography is going to go away, I think. You're still going to have photographers, of course, for like public events and stuff. But like, you don't need to pay somebody to give you a headshot anymore, to come take a picture of you for business anymore. AI will do it for you, and it'll do it in a much cleaner way. I look better in this than I do, than I would if I hired somebody to come take a picture of me. And so those are where they're really changing the game. 4 minutes, guys. We got 4 minutes until what comes out in 4 minutes? Crocs. American Airlines and Crocs drops in 4 minutes. I didn't know Crocs was such a big company here. Let me see what the market cap of Crocs is. I'm genuinely curious. All right, so we got Crocs and American Airlines drops their numbers pretty soon here. Here's AAL. So Crocs' market cap is $9.12 billion. What a huge market cap for Crocs. Crocs has a larger market cap than American Airlines. Interesting. Yeah, they're super expensive too. My kids got them. He looks like a visionary. A. Looks fake. That's because it is. But the clients don't care, you know. What happened midday yesterday? Market tanked. FRC crashed. Got halted numerous times. Scared everybody in banking and all that stuff is what happened. All right, guys, we got it. 2 minutes. 2 minutes. Yeah, honestly, I did too, King. Everybody did. Everybody back then. Crocs turned from a gag gift joke shoe into one of the biggest shoe brands in the world. Now they're selling for $70 a piece, man. Who knew, bro? Who knew? You know, nobody did, dude. All right, guys, we got a minute left. All right, here we go. American Airlines. 40 seconds, guys. 40 seconds. American Airlines. Let's see what shows up. Tractor Supply came in. Missed EPS. Missed sales. All right, guys. Here we go. 20 seconds. 20 seconds. All right, we got Crocs and American Airlines on the right, waiting for these numbers to come out. 10 seconds. All right, so there is the bell. Let's see when these numbers come out. Nothing out yet. All right, Bristol Myers put in adjusted EPS of 205 versus 197 expected. Nothing out yet for Crocs. Looks like American Airlines are out. All right, so yeah, American Airlines just dropped. They posted a American Airlines are out. They are reacting much better to this. Up to $13 a share for American Airlines. So yeah, they posted their numbers. Sorry, I hate reading earnings reports. They make it so hard to find the EPS value. Bear with me. We're going to find it. Pun intended, I guess. Comcast. All right, so American Airlines posted 5-cent per diluted share EPS on net income of $33 million. They posted first quarter net income of $10 million or 2 cents per diluted share, excluding net special items. So 5 cents a share EPS versus 5 expected. Revenue of 12.2, or no, revenue of net income of $10 million. Reiterated fiscal year guidance for AAL. Comcast, 92 EPS on 82 cents revenue. Crocs doesn't look like they're out with their numbers yet. Crocs reported first quarter revenue growth of 34% and raised fiscal year guidance. Speaking of Crocs. Comcast did better than expected on EPS and revenue. Bristol Myers. MBLY. I don't know what that is. Yeah, they dropped adjusted EPS of 14 cents per share, beat the 12-cent estimate. Sales of 458 million, beat the 456.7 million estimate. Keurig Dr. Pepper did adjusted EPS of 34, beat 33-cent estimate. Revenue of 3.35, beat the 3.3 estimate. Yeah, parentheses does mean negative. All right, so AAL did adjusted EPS, or a EPS of 5 cents, in line with estimate. Sales of 12.19. So here's American Airlines full numbers. Rockwell EPS of 301 versus 261. Revenue of 228 versus 2.1. So better than expected on both for Rockwell as well. Yeah, there's American Airlines. They are dipping down from this. Crocs is not really loving it either. Crocs is dumping down some. Yeah, Crocs is one of the ones that's a little late on. All right, so yeah, American Airlines reiterated their fiscal year guidance, so neutral for guidance. Crocs posted EPS of 239 versus 213 estimates. Revenue of 884.2 million versus 850 million estimates. So better than expected EPS. Better than expected revenue. Net income came in at 149.5 million. I don't know why Crocs is down. They raised their guidance too. I'm going to buy up a little bit of Crocs right here, guys. They raised their guidance. Did better than expected on both metrics. If I can buy it in time before it bounces. There's the bounce. All right, we bought 25 shares. We got one of the worst fills ever. That sucks. Wow. We just got one of the worst fills ever for Crocs. We got filled. Oh my gosh, bro. Crocs, you jerk, dude. They gave me the worst fill I've ever seen. Wow. I guess it's my fault. But, bro, Crocs filled me. Crocs filled me right here. You jerk, Crocs. How dare you? Thanks, Crocs. When you try to buy a dip and it doesn't work. Yeah, I hit the ask, so it's my fault ever. It's my fault for sure, but I can still complain about it. Oh. Yeah, let me try to buy the bid and fix my average a little bit here. Fill me. Somehow I got into this predicament where I'm using limit orders and the fills are just not great. Disney ramp it up. You love to see it. I'm just going to leave our limit order up there. Altria, 118 EPS versus 118 expected. Revenue of 5.72 versus 4.9 expected. Reaffirmed guidance. What the heck is going on with Crocs, bro? Okay, I'm going to have to just get out of here. I think I bought way too big of size. And this is just kind of worst case scenario. Wow, dude. Ugh. Well, if you can learn anything from my dumb trades today, it is never, ever, ever buy Crocs with low volatility at 6 a.m. in the morning. Yeah, I got what a crocker. You know what? It's all right. Look, again, we're still very green on the year, and we're actually up about $100 on Disney today. So, like, it's not as bad as it could be, but I'm certainly not happy about it. You know, yeah. Honestly, I don't know why Crocs has fallen down so much. My biggest mistake, I think, is I took too much size. Crocs BDPS beat sales, raised guidance, dropped $8 a share. Who knew? Yeah, definitely top 3 worst fills ever in the world. Again, luckily we're green on Disney, so we're actually not down that much. This is the P&L this morning, so it could be worse. You know, we are down about $130 today, but that's all right. Again, could be worse. Yeah, guys, GDP data coming out today, too. So we'll see if we get something good. Hopefully, y'all can learn. The puns today, man. The Crocs puns. Are you just joking, Cubano, or do I need to ban you, bro, with the your mama joke, dude? Again, if you're just joking, it's all good. We can take a your mama joke based off of Crocs, but like, you know, if you're trying to genuinely be hateful, just let me know. I'll ban you. You know, American Airlines dumping down. Meta ripping up today, though. So Meta ripping up. I don't even get Crocs out of my sight today. Again, like I said, if I wasn't up enough in Disney today, I'd probably be a little upset about it. Okay, I know. I'm kind of joking back with you. Running from the cops in Crocs doesn't sound like easy. When you say you bought a little Disney, how many shares? I'm not going to be specific. It's over 100. How was Amazon? Amazon's loving life right now. It's up to 108. It's one of the big reasons the market is going up today. Look at the SPY, though, ripping up here. American Airlines dumping down. All right, guys. So, yeah, Disney looking great. Amazon over 108 right now. Amazon over 108. Bro, what I don't understand is like, bro, how many people, like, what I see as a common theme on social media, and this has happened so much, bro. I've seen this happen so much, is that like people will buy up terrible penny stocks long term. as long-term investments. Like, bro, like, I don't care how good anybody thinks a stock is. I don't care how good your due diligence is. There's no way to tell if that stock is going to go up, down, or sideways long-term. In fact, the only probability you really have is that a large majority of them are going to go down. And so what I've noticed is that, like, people buy up really speculative penny stocks, and then when they fall down long term, like they drop 80-90% over the last year, then they start finding all these ridiculous conspiracy theories to justify the price dropping. You know, to say, oh, it was a good company, but, you know, these people are trying to keep it down. It's like, how many times can you say that before it becomes redundant? You know, how many times can you say that before, you know, you just kind of look at it objectively and say, hey, I'm investing my money in like really sketchy, obscure companies that nobody's ever heard of, and, you know, don't make that much money and are really struggling with regards to margins. You know, but instead it's like these letters both end with the letter S, and so that could be a sign that the big man's holding the stock down. You know, manipulation. And it's just kind of like, well, maybe, but unlikely. Amazon up to 108s here. Hey, I'm curious, what is the average length of time if worked daily can someone expect to take to accomplish top step requirements before funding? I mean, that's too vague, man. I mean, it really depends on the strategy. It depends on the trader. Like, again, like I day trade. My TOS account's got like, it's got anywhere between like, generally it's got anywhere between like 35 and 40,000 in it on any particular day. Now sometimes I'll move money around and stuff, but I'm already funded, and so for me it's going to take longer because I'm just kind of slow, because again, funding is not like a necessity for me. Of course, like I said, I'm holding 100 plus shares of Disney right now. I bought freaking 50 shares of Crocs just now, you know, and so for me, it depends. It depends on how aggressive the trader is. It depends on what their risk tolerance is like. It depends on what their strategies are like, what their accuracy rates are like, how well, you know, trading they do during the specific time frame. And so there's not like there's an average time. I would say, like, you know, the really fast ones are going to get funded in a couple weeks. But people like me might take much longer, you know. Hey, what's up, Sim? The penny stock algo is crazy, diabolical, and intelligent. Yeah, and I know people probably are at home like, man, this dude never shuts up about penny stocks. And maybe that's true. But I see it so much, bro. Like, the biggest problem a large majority of traders are making in the financial markets, like the largest problem that I see traders make every day, is that they're spending their time worrying about these obscure, terrible companies. Like, these are obscure companies that do not make money, that margins are terrible. Even if they put out the greatest sounding releases ever, they're still struggling, and they need to sugarcoat their releases to sound better because they're struggling, you know. But for whatever reason, man, new traders just love them. They just buy up. It's like the Wolf of Wall Street. If you ever seen the Wolf of Wall Street, that's precisely what it is. It's just, you got people behind the scenes just pumping them up, trying to sell to, you know, again, the quote from the Wolf of Wall Street. Again, it's not my quote, but the quote from the Wolf of Wall Street is, we're selling garbage to garbage men. You know, so it's like people that just are oblivious to what they're doing. And that's the biggest mistake that I see people make regularly. And so, again, I might sound like a broken record. I might say it over and over again, but I think people are going to realize very quickly, like, putting money in blue chips and mid caps even sometimes is just far better in terms of probabilities than putting all your money in speculative penny stocks. One thing I might be doing pretty soon is Top Step has a swing trading combine. That's kind of my niche more than anything else. So is a bull market back is the real question here. And I don't know. Amazon ripping big. SPY pull it back a little bit. I'm tempted to buy it. Meta dipping down from the high test. American Airlines dropping down some. I prefer my money in a Ponzi scheme. Well, I'll tell you this. You're going to get pretty similar results in both of those. So I don't know if it really matters too much. So Cincinnati has exercised Joe Burrow's 5th year. They better keep Burrow. I'm rooting for him too, bro. I never knew I would be a Bengals fan. I never knew I'd be a Bengals fan, bro. Then Joe Burrow got drafted by the Bengals. And now I've been watching him every year. They got your boy Jamar Chase, as running back. Yeah, they're just doing it, man. I'm rooting for the Bengals. My Saints just are not doing that great. So, hey, it's all right, Yeah, I don't know, Pawn. I think swing trading the S&P 500 with micros, especially when you consider like the profit target is much smaller in the swing trading combine, I'm pretty sure. And so I think that could have value. Maybe I'll test it out. All right, so here's the rules. It's a 10K swing trading combine. Oh no, they don't let you buy it. I don't think you can even get it anymore. All right, guys, Meta's still popping up. Still moving up big. What's up, Chris? Do you think the bank yesterday will still move the market today? Maybe. Yeah, that's right, Pawn. Yeah, Jefferson. Well, Jefferson plays for the Vikings, right? Yeah, Jefferson plays for the Vikings. I like Jeff, but Chase, bro. What you're learning from Chase and the Bengals is that boy can catch anything, dude. It doesn't matter what kind of defense is there, what kind of guarding takes place. Like, he's catching whatever in the heat, in the fire. He's catching it. That's what Chase has shown us the last couple of years. I mean, he showed us that at LSU, but like the last couple of years on the Bengals, you really see it. So Burrow and Chase getting into that rhythm, All right, guys. So again, Meta back up to 235s here. SPY trying to bounce back. Yeah, Burrow, Jefferson, Jamar Chase. What was the little tight end guy? Fast little guy. Clyde Edwards-Helaire. Yeah, there's a lot of great players on that LSU team that they're all doing well, basically. I think Clyde, I don't know what happened to. I think Clyde got hurt. So Edwards-Helaire has been injured since week 11 of last year. Ankle sprain. So he's been out for about a year. Hopefully he'll be back next year. He's on the Chiefs, I believe, right? All right, Meta's still ripping up at 353 50s. GDP is expecting 2% growth in GDP data. Jobless claims data are expecting. So again, GDP data. We'll put this all up on screen. GDP is expected to show 2% growth. Jobless claims are expected to come in at. So jobless claims are expected. So GDP data expecting 2% growth, quarter over quarter. Jobless claims expected to show up at 248 for initial claims. All right, so here is the expectational numbers for GDP data. You got the SPY ripping up. Meta still popping up as well. Amazon had a great day too. Amazon flying up this morning. Yeah, Comcast beat on EPS, beat on sales, if I remember. LSU's not going to beat the Saints, Chris. So definitely not LSU's last team. I mean, Daniels is good and all, but yeah, the Saints pro and college are just different levels. Now, maybe the 2019 Burrow, Chase, Jefferson, Clyde Edwards-Helaire team, maybe they could beat, the current Saints team, maybe, but Saints need a quarterback. That's what they really need. Bro, I kept telling people I didn't like Winston. Winston was not good. And everybody kept saying, oh, Winston's great. He's great. He did great in college or whatever it was. But Winston's just not good. I know our offensive line needs to do some stuff, but all right, guys. So, yeah, look at Meta testing highs again. We still got about an hour, but look at Meta rip. So, highs of yesterday after the earnings report are 236.20s, 236.20s. Yeah. All right, guys. So again, SPY pulling down to 406.70s, 406.70s. All right, again, Meta up there at 236. American Airlines at 12.65. SPY bouncing back to almost 407s again. Disney moving up nicely, so you love to see it. Amazon just huge rip up today, over 108s. We got the data coming out in about an hour. Again, so let's see if American Airlines bounces back. Crocs bounced back a little bit. Maybe I could have held it, but not enough to really make it worthwhile. Yeah, honestly, I always like the NCAA games. Sounds like you got some Saints hate. Chris, don't hate the Saints, bro. You gotta love the Saints, bro. My dad's side is mostly from New Orleans. Not New Orleans. So a lot of my dad's side, like a lot of my cousins are from New Orleans. Like my grandma lived in Mandeville, which is like an hour away, right across the bridge. And so I love the Saints, bro. I know they suck, but like they're a small cap team for the most part, like they're not a big team. They'll get there one day. Oil prices. Yeah. From the bear? Yeah. I mean, Bitcoin bounced back pretty quick. I mean, it's back up to 29,000. Look at okay. SPY's still moving up. Again, Disney's still green. Texans are horrible, bro. Texans' worst team in football. No, I don't gamble on sports. Not really. The only thing I'll ever maybe do, like, I'll play around with like UFC, but like I don't ever bet on football or baseball. There's just no way to tell. There's some of those sports where, where there's so much variance in who wins, especially baseball, but football as well, that it's just not really a profitable thing. Like the edge that you might get doing it is like a couple percent or less, and it's just not, again, sports betting is mostly filled. And again, I give me a little bit of UFC, maybe. UFC, I know it. I know the UFC well enough to where I can usually pick the winners. But baseball, especially, baseball is just so much variance with who wins. The Astros are a great team, but like they can go on like a bad, string of games, and so it's just too much variance there for me. Football is a little bit better, but I don't know. I think football. I think there's a lot of people with gambling problems in football. You know what I mean? Like I think I'm not hating on you if you bet on stuff. But as long as you keep it under control, and I think a lot of people don't. I think a lot of people just kind of run a little bit too crazy betting on sports. Like I'm never the type of person that's going to put hundreds of dollars on any one bet. It's just not worth it to me. Sometimes like UFC, I'll $10-$20 just to make it fun. But I'll do that with like my family too, like friends of mine. But it's never going to be like I'm never going to be watching a game stressed out, nervous, losing a bunch of money. Like, it's just not what I do. I just don't like that at all. I don't like that feeling. It's just not something I necessarily like doing. Yeah, all good, Alex. It's all good, bro. Yeah, I'm in Houston right now, Alex. So, I mean, I get it, dude. Hey, congrats, Donald. That's nice, man. Congrats, brother. Yeah. Where do we find the earnings date exact release times? I use like Earnings Whisper. Again, hit the like button, guys. We got 85 likes. We got 400 people here. Y'all could do better than that. Yeah, I wanted to go. Like, I was gonna pay for my dad to go to the World Series with me with the Astros. I'm still bummed I didn't go, bro. I was gonna go to Game 3 of the World Series this year, and I was gonna bring my dad. So I was gonna buy my dad a ticket. My daughter really wanted to go. I might have brought her, but then if I brought my daughter, then I have to bring my son. And like before I know it, I'm paying like 15,000-20,000 to go to the freaking World Series. And so I was just gonna go with my dad, so I could experience it. And I told my dad I would buy him the ticket, but LSU Bama was the same day. So LSU Bama was the same day, and my dad already had tickets to it because they have season tickets to LSU games. And so same day. I told my dad last year, I was like, LSU's gonna lose anyway, and so come to the World Series with me. And he said, no, I'm going to LSU Bama. And then last year it ended up that game where we won in like the last couple seconds, and everybody stormed the field. It was a really cool game. Then my dad filmed it and was like, see, I told you, I should have gone to LSU Bama like I did. And so I understood then, but yeah, still bummed out I didn't go to the World Series. I think we would have lost the game I went to anyway with the Astros, but it's all good, Stock trading is a great cure for other types of gambling, in my honest opinion. Yeah, well, I mean, it depends on what you do. Like stocks, the edge is higher, in a lot of different ways if you're doing it right. Like if you're doing stocks right, you have a much higher edge than you're ever going to get betting on football or baseball. Betting on football or baseball, again, the variance, baseball especially, the variance is so freaking high that like you might have the best baseball team ever. They're still going to lose, they're still going to, lose games. And so betting on baseball is just kind of, again, it's such a high variance, low edge thing that I'm just never going to do it. It's just like, I don't need to do it. It's just kind of a waste of time. Like to spend my energy betting on baseball is just a waste of time. Yeah, I understand, Joe. Yeah, I could probably see that, Richard. He said problem with doing that is that they're not fun afterwards. Right, 100%. Yeah. All right, guys. SPY pull it back a little bit here. But again, we've been on a big tear up over the last pre-market session. We still got about an hour before the data comes out, about 1 hour. What was your question? Always. Oh, okay. Got you. Yeah, no worries. Astros give you an edge? Well, not really. Like, you got to think about it. So, even if you got a one team that's winning a lot, the odds makers are going to compensate for that. Like you're going to have a lower payout. So, again, it's just not, baseball is just not worth it for me. The variance is so high, it's just not worth it. SPY's starting to turn, though. Caterpillar reversed all pre-market gains after the earnings beat. Did they really? Maybe it's guidance related. Yeah, they're down to 212. What's up, Paulo? Unemployment data. So today's GDP data, not unemployment. Unemployment data comes out, I don't know when. I think unemployment data comes out next week. Is it next week or when's unemployment data? Is it tomorrow? No, I don't think it's tomorrow. Tomorrow's PCE, Canadian GDP. And then the Michigan consumer sentiment data. Wait. Is today the European rate hike decision? No. Okay. When is the rate hike decision for Europe, the ECB rate hike decision? We've been covering that too. Yeah, so tomorrow is PCE data. All right, SPY pull it back to the volume weighted average price. We'll see if it bounces. Busy couple days here. Yeah, so next week we got ISM manufacturing numbers. JOLTS job report Tuesday. European CPI Tuesday. Wednesday. Wednesday, we got non-farm employment change, Fed interest rate decision, non-manufacturing PMI. Next Wednesday is probably the biggest economic release day we get. Today's a pretty big one too, though. Okay, so the ECB rate hike decision is Thursday. Yeah, tomorrow, next week's big week too, honestly. A lot of stuff going on. Weren't the Astros playing the Rays lately? Yeah, Astros beat the Rays yesterday. Rays didn't sweep the Astros. Yeah, so the Astros lost to the Rays on the 24th. The Astros beat the Rays on the 25th, beat the Rays yesterday on the 26th. Next, we play the Phillies. Yeah, to say the Astros are the worst baseball team, like I said, you're just mad your team lost by, against us. That's all it really is. Anytime I hear somebody really hating on the Astros, all I think about is y'all are just mad y'all's team lost. 100%. Baseball is a game of corked bats, pine tar, finding an edge whatever way you can. Are y'all really mad a team did what they could to find an edge before it was actually against the rules to do it? No. And a lot of other teams did it too. The Yankees did it. Just so many other teams did it, right? Anybody that's still like ranting and raving about the Astros are really just mad their team lost and they just can't get over it. That's all it really is. But get mad because Astros best team in baseball last year, probably the best team in baseball this year. And even if we don't have Verlander, he's over there at the Mets, we're still going to be in the playoffs at least. Oh, come on, bro. Stealing signs has been a huge part of baseball. If a player's on second, they're allowed to steal signs. But like now that technology caught up and they didn't change the rules for it, people are mad about it. Like I said, people are genuinely just mad their team lost. I mean, they might blame it on other things in their mind. Like they might say, oh, yeah, well, But like really what they're really mad about is that their team lost against the Astros. American Airlines started to rebound a little bit. Caterpillar bouncing back too. It's at 214.30s. I was thinking about buying a dip, but I'm going to wait. I was really thinking about buying the dip, but I'm going to wait. Amazon pulling back to the volume-weighted average price, and I think Amazon's an interesting one to watch. Here's CAT right now. CAT all the way up to 214s here. Astro fans in denial, bro. Astros won the World Series last year without signs. Like you're bringing up years old things. Again, get mad. Again, that's okay. Like I said, it just shows you're angry, and that's all right. Be angry, bro. I mean, listen, I get it. When the Astros are as good as they are right now, a lot of people are upset about it, and that's okay. Because again, all that really matters is that our team's better than your team. Without sealing signs, our team's better than your team. We don't know. GDP data is expected to come in at 2%. 2%. We'll see if they do. But again, GDP data expected to show up at 2%. And again, we did a poll on Twitter this morning, and the poll is really interesting. Poll is really interesting. Because again, GDP data coming out. Very relevant release. SPY bouncing at the volume weighted average price. GDP is expected to show up at 2%, guys, 2%. And again, it's one of those situations. We did a poll earlier, and what we asked people on this poll, and I hope you guys will participate in the poll, but what we asked people was we said, hey, GDP data goes live. Remember, if we are in a more recession-fearing market, like the latest FRC stuff could cause, that means the market will probably react well to GDP and economical growth. If we are in a more inflation-fearing market, then that means the market will react negatively to economic and GDP growth. And so again, 2% is the level. What today will really tell is what the market is fearing in regards to inflation, and recession, we did a poll on Twitter, and you can vote on our Twitter poll. It's at Beginner Trades. Beginner Trades. We'll post the link here if you want to check it out. But yeah, what we asked people is what is the market fearing right now? Inflation's got about 23% of votes. Recession's got about 31% of votes, and both have about 46% of votes. 46% of votes. And so again, I agree with both. I think the market's fearing both right now. And so I think with this GDP report, nobody really knows what we're going to get here. Nobody really knows if we're going to get good news, bad news, good reaction, negative reaction. Nobody really knows. Yeah, Matthew. I mean, listen, man, you sound bitter, bro. It's okay, dude. Let it out, man. Let it out, bro. It's okay. If you think Verlander's not going to make the Hall of Fame, like I said, of course he is. Yeah, the market does not know what it wants, honestly. They don't know if they want to go up, down, sideways on this data. They really don't know. We got about 45 minutes before the data release. 45 minutes, guys. And again, the market really doesn't know. No, I like the pitch clock, CT. I think the pitch clock is absolutely necessary. It certainly helps with offense, as well as banning the shift. That it's necessary. It improves offense, makes the game more exciting. Stop stalling. I agree 100%. Caterpillar at 213.50 right now, 213.50s, guys. Again, we'll see if we pop. We got time. We'll see what we do. We don't know, Martin. Again, it depends on what the market is fearing more. And again, we have this poll. Again, if you want to vote on this poll, I appreciate it. SPY dipping down a little bit. Let's see if Meta bounces at this volume weighted average price level. Yeah, jobless claims is the other nuance that we should pay attention to here. Again, high jobless claims numbers means less people working, which in terms of inflation versus recession fearing, higher jobless claims numbers would be better for inflation, worse for recession fears. So again, today is at the very least today, what we'll get from this report is an interesting test of what the market is fearing. Yeah, I got a terrible fill, and it was my fault completely, Snow. But yeah, I got out. I'm out of it. There's no point in sitting in it. Lost a couple hundred on accident, but that's my first loss over a couple hundred in months on TOS, so it's all good, man. It happens. Yeah, Cat beat earnings, but it's down. Yeah, Cat. You got to look at other stuff too. Like Cat put out numbers of. Cat put out adjusted EPS of 491 versus 380. Revenue up to 15.9, better than 15.1. Operating cash flow of 1.6 billion. And so maybe there's an argument for a little dip buy in Cat. Again, though, it depends on what GDP data shows up as. So we'll wait a little bit and see what GDP data shows up as. Meta ripping up too. Meta's at 234.80s here, guys. We still got 40 plus minutes before the data comes out too. And again, give your boy a follow on Twitter. We appreciate it. Here is that link if you want to check out our Twitter votes. Right. What Max says is absolutely true, which is the Astros have been to 3 World Series since the 2017 stuff. They beat your team with or without the sign stealing, 100%. And that's what people got to understand. It's like, look, man, again, Astros, people can hate on the Astros. They're really just mad because they're winners right now. Like, that's all they're really mad about. Again, if you look at it objectively, all teams have been trying to steal signs for the last couple decades, honestly. Corked bats, like all this stuff. Like, are we calling every team that used a corked bat sketchy? Of course not. Are we calling every team that uses pine tar or some type of sticky substance with their pitchers cheaters? Of course not. Again, they're targeting the Astros because the Astros are winners and they're mad. Meta at 234s. Let's see if we bounce at the volume weighted average price. The SPY at 407s. High jobless claims equals no rate hikes? No, not necessarily. The jobless claims is not going to be super influential over rate hike decisions. I mean, it might influence it some, but more importantly than any of that is going to be GDP growth, because what aggressive rate hikes ultimately are trying to accomplish is economic and GDP weakness. And so it might be something where if we have lower than expected GDP data, that's when the Fed might start considering a pause. I think. And we do have the rate hike decision next week on Wednesday. Very relevant week, very relevant day. And so, again, we do have the rate hike decision Wednesday and a lot of other stuff, to be honest, coming out. So a lot of other stuff. Wednesday, a lot of data dropping. And again, let me know what you guys think. Do y'all think we'll pause during the next rate hike decision? Again, nobody knows. We'll see. Well, yeah, I mean, of course, the Fed is trying to accomplish a soft landing. I understand that. But, you don't want GDP growth to be out of control. Again, not right now in inflation-fearing markets. So again, I've covered a lot of the GDP reports. I don't know if the Fed's going to pause, I should say, because of course the Fed is. I think you're actually right, Narcissist, in terms of like the Fed's trying to accomplish a soft landing. And so a soft landing, if you don't know what that means, a soft landing means that the Fed can raise rates aggressively like they have been without driving us into a recession. And a recession is defined. The technical definition of a recession is having two consecutive GDP losing quarters, which we're not anywhere near. I mean, we're expecting a GDP growth quarter here. So, that's not really a worry at this point right now. But if the banking crisis continues to spiral, that's when it's going to be a potential problem. Again, we're going to lock in some profit on Bank of America. We bought the dip yesterday. Wells Fargo, we're green on that one too. We'll go ahead and take another piece off here. There we go. Yeah, it really is, Ernie. Cheating, like finding an edge however you can is one of the romantic parts of baseball. Again, cork bats, like you got baseball players who put cork in their bats trying to hit home runs. Pitchers use sticky substances against the regulations and rules of the Major League Baseball. And so, yeah, it is what it is, man. Again, people targeting the Astros are really just mad. I think they're just kind of letting out their life frustrations on it, and that's okay. I'll be your Huckleberry. I'll be your therapist. It's all right. Again, SPY bouncing back up over the VWAP here. We'll see if it holds. Amazon at 107s, 108s. If banks fail, they might not have any choice to hold hike. Yeah, for sure. If banks fail, they're probably going to pause. How gold affect GDP and jobless claims? Well, gold's affected by, gold's kind of been following. If you look at gold futures right now, we can look at it on the left side here. So here's gold futures. If you look at gold futures, gold is at 2,000 right now. If you look at it on a daily chart relative to like the SPY itself, you'll notice like gold is leading the market some, but it's also pretty similar to the market over the last 6 months. Like here is October for gold. October was around, the lows of gold were around, gold was around lows in October. If you look at the SPY, same thing. SPY was around lows in October. In the last 6 months, markets basically bounced back. And gold has bounced back from 1,600 all the way to 2,000, up about 25%. Or no, I'm sorry, up about 30%, really, give or take, in the last 6 months. SPY, nice little bounce back as well. So conventionally, gold was a hedge against, fears in markets, but lately it's been kind of following the market to a certain extent. Not a complete correlation, of course, but like it's been following the market some lately. It was what's his name? The guy, the crazy one that's got 2 different color eyes. What's his name? The guy who got thrown out. And he's one of my favorite. He's one of my favorite pitchers. Y'all know who exactly I'm talking about, chat. Who's the crazy angry pitcher who has 2 different color eyes? He plays for the Phillies. Is he on the Phillies right now? His name is Max Scherzer. Max Scherzer is his name, and he is playing for the Nationals, not the Phillies. The Nationals. But yeah, it was Max Scherzer who got thrown out the other day, and he said he said he was using rosin and water, and that his hands were sticky. His argument was that they made him pour alcohol on his hands, which when you mix it with sweat and rosin, makes your hands stickier. And so it's like they told him to put alcohol on it. He did. That made his hands stickier, and then when his hands were sticky, they threw him out. It was Max Scherzer though. But yeah, gold is an interesting. Gold has gained more value than the S&P 500 has over the last 20 years. Like gold has essentially 4x'd over the last 20 years. If you look at gold, back on in 2010, gold was at about $1,000 in 2010, about $1,000 in 2010. Actually, gold is only up 100% since then. So in the last 10 years, gold is up 100%. If we look at it since 2000, though, since 2000, yeah, okay, I'm actually right. So since 2000, gold has effectively gone from, in the last 500 years. So 20 years ago, gold was at about 500. Now gold is at 2,000. So gold is up 400% in the last 20 years. If you compare that to like the S&P here, the S&P at the same point, which was 06 is what the level I'm looking at, was at about 120. And now we're at 400. So, I mean, it's similar growth. Gold is about similar growth with the S&P. Man, gold's sitting at 2,000 right now. It went all the way up to, if you look at the last 10 days, gold hit almost 20, or it hit 2,065. So gold's had a very strong 20 years, couple decades. Silver is one I'm less familiar on than gold exactly. I know a lot of people trade silver though. What's the symbol for silver in futures is my question. Like, what's the silver symbol? It is, let me look this up, SI. So here's silver. Again, doing the same thing. Let's take a look. So silver was at about $10 in 06. It's now at about 25. So silver has gone up a little bit less than gold, but still appreciated, over over 100%, about 150% up since the same point. So silver has appreciated, well, but not as much as gold has. Gold has gone from essentially 500 to 2,000. Silver has gone from about 10 to 25. The S&P has gone from about 120 to 400, or the SPY has gone from about 120 to 400. So, yeah. So I mean, All have appreciated fairly nicely, but not as much as gold. Yeah, good morning, Liz. Yeah, that's smart. I mean, football, man, if I was a football player, I would just diversify, man. You diversify and you put, say you put 1 year's salary into investments. Say you're like a really good player. Say you're making 20 mil a year, right? You put that money, you put 10 mil, you put half a year's salary into index funds, bonds, real estate, and you just keep it there. And then maybe some dividends too. So if you want to get paid from them, maybe put some dividends, buy some dividend paying stocks. You do that, like you're gonna never be broke again. You know what I mean? Football players and sports stars in general have a spending problem, is really what it is. Like they're living, even though they're making tons of money, they're still living above their means a lot of the time because they think it's never going to stop. But I think players over, like that was really bad in like the 80s and 90s. It's gotten a little bit better now, I think, though. People understand financial stuff a little bit more than they used to. So, all right, guys, 30 minutes, 30 minutes. %95 of the chips used for AI are manufactured by NVIDIA. All right, so let me ask Bard. All right, so SPY pushing back up to 407s here, still making moves. I look at SPY popping back up there, Caterpillar dropping down some. All right, guys, so All right, look at the SPY fly up, guys, to 407.20s. Giving back a lot of the losses it made yesterday. Huge pop up here. Good. Let's see it keep growth up. Again, we got about 25, 26 minutes here. Yeah, FRC just crashed. Yeah. Odell Beckham. Yeah, Google. I mean, Google's up a little bit. It's not up huge, but it's up. Yeah, FRC struggling down to 570. SPY popped up over highs, though. Caterpillar, I wanted to buy the dip. I waited, and I shouldn't have. They don't ever release the data early. Not with GDP data. Yeah, so GDP data rarely comes out early. Look at the SPY up there. Gold pull it back a little bit. Caterpillar still down. And again, I wanted to buy the dip. I just kind of waited. Nice little run here, though. Look at this. So SPY over 407.20s. Over 407.20s. SPY retest. Why did we rip? MasterCard, maybe? MasterCard dropped first quarter adjusted EPS of 280 versus 272 expectations. Revenue of 5.7 bill, expected 5.64. Purchase volume is up to 1.71 trillion. They expected 1.65 trillion. Second quarter revenue growth view in the high end of low double digits. April to date transaction volume plus 17% year over year, and CBV is plus 29% year over year. So maybe MasterCard coming in with these numbers here. We'll put the numbers up in chat, but that's probably why they're up, I'm guessing. All right, guys, pulling back a little bit now. Yeah, to the moon. Microsoft earnings, remember on the conference call, they said they have been working with Snapchat. I'm extremely bullish on Snap. Yeah, of course. We're going to stream it later on today. 2% is what GDP days is expected to show up as. Yeah, 2% is what GDP data is expected to show up as. Hey, what's up, wholesale? All right, guys, 20 plus minutes until the data comes out. 20 minutes. All right, SPY bouncing back up here. Gold on the left. Caterpillar is rebounding a little bit from the big dips. We can also look at the dollar index, which is an interesting dynamic here. The dollar index been pretty choppy today. If you look at it over the last 20 days, it's been dropping, which is good for markets. Generally, there's an inverse correlation with the Dixie and markets because, again, there's a lot of reasons for the inverse correlation. The main one being a high dollar is bad for inflation problems. And so the market's going to go down if the dollar goes up, as well as the fact that if you're sitting on cash and your cash is gaining value, you're not going to buy investments with it. You're not going to take that money a lot of the time and put it into the S&P or put it into crypto or put it into Bitcoin or whatever. You're instead just going to sit on your cash because your cash is gaining value. If your cash is losing value, what are you going to do? You're going to say, oh, well, my cash is losing value. Let me take this and dump it into the S&P, put it into crypto. And so because of that, there's generally an inverse correlation with investment vehicles versus the dollar index, the DXY. So again, the dollar index is dropping, as you can see the SPY moving up here. And so an interesting dynamic today with markets and GDP data. Again, we did a poll on Twitter asking people, what kind of market do you think we're going to get today? Again, if the market is fearing inflation more, then generally they want less than expected GDP data. If the market is fearing a recession more, generally they want higher than expected GDP data. But again, the Fed is also trying to accomplish a soft landing. And in that regard, you know, it's one of those things where the whole point of a soft landing is to raise rates aggressively to curb inflation without causing a recession. And the technical definition of a recession is having 2 consecutive losing GDP quarters, which again, we're not expecting that. We're at 2% today. SPY still testing the highs. We're at 407.20s right now, 407.20s. What would be considered good or bad for GDP? Well, it depends on what you're looking for. Again, if it's recession fearing market, higher GDP is going to be seen as better. If it's an inflation fearing market, lower GDP is going to be seen as better. And my guess is it's somewhere in the middle. I don't know how the market's going to respond today. We'll see. Yeah, I mean, Christy, I don't claim to be a professional trader. I don't even claim to be a good trader. I don't claim to be an expert or anything. My channel's literally called beginner trading. My account's got about 140,000 in buying power, though. I always never understood the people who shame people for a specific brokerage. Like, to be honest, I think a lot of the people that are using these super fast, like commission, like brokers that you have to pay commissions to, are just easier to sell. Like the salesmen at these brokerages are just kind of pumping them up and saying, oh, ours is the best. You need us if you're a pro. And they let their pride get to their head. And so they end up just paying 20+% in commissions over time versus somebody like me who I'm mostly swing trading. And so I don't need the best fills in the world. Like I just need, decent fills, which TOS certainly gives me, and there's no commissions to add to it. And so again, y'all can use brokers that you pay a commission to. That's fine. In stocks, futures, of course, I'm using Quant Tower, and Quant Tower is great, great platform. But stocks like TOS is zero commission, pretty decent fills, great charting. So I mean, there's never been a soft landing in U.S. history. Yeah, I don't know about Tesla. It depends, man. Tesla has had a bounce up to 154s. Right, for sure, 100% hamster. It's dumb thinking that you have to have some broker. Again, those are usually really gullible people who are just kind of getting sold by salesmen at the brokerages. And so they're acting like they're elitist because they use a specific broker. Again, usually it's the the less smart people, you know. Not saying if you use a broker that it's, you know, if you're dumb or anything if you use a specific broker, but like if you're elitist to where you're shaming somebody else for the broker that they're using, you know, again, I don't know how much awareness that person has. Regardless, it's all good here. Well, the Crocsville was my fault. What I did, Bob, was I sold the ask price, right? So that's what I clicked, and that's what it gave me. It gave me the ask price. Um, doesn't matter what broker I'm using; it's going to give me the ask price when I click it. Suggestions for somebody wanting to understand this terminology and charts: just start. Don't get caught up paying for a course. You don't need a. There's some good courses out there. But a large majority of courses, especially penny stock courses, are utter garbage nonsense that are just trying to take advantage of naive traders who don't know any better. So if you're new, don't fall for the course gimmick. Most of the content that you need to learn trading is available for free on YouTube. So YouTube is a great resource. You can find tons of free content here, not just on my channel, but lots of other channels. You're going to get people who try to sell you super overpriced courses for thousands of dollars and quote unquote mentorship for thousands and thousands of dollars. Again, most of the time they're fudging their numbers. So just start small, trade small. Don't try to be a hero and trade super large sizing in the beginning. Trade very small paper trade. Learn how to trade. And then if you're good enough, then scale up in size is my advice. But again, I don't know. Might be wildly wrong about anything and everything I say. Don't copy me. What about front running your order? I mean, I'm not really buying up penny stocks, and so front running doesn't mean anything. Like nobody's pumping up Apple or Disney or Tesla, you know. Floats are just too large. There's too many shares out there, so like anything I'm doing is not influencing them. The main front runners in the market are penny stock gurus, you know, calling out, like entering huge positions and then 10 minutes later calling out to their thousands of followers, hey guys, I just bought this low float penny stock, and then pumping it up and then dumping on those traders. That's the most common way. Yeah, for sure. What do you think of the weird Bitcoin drop yesterday? Yeah, I heard some rumors about that, but I don't know. Chipotle's got like, I think it's like 30 million in the float, which is actually a pretty small float relative to like other stocks like that. Somebody said, oh, how is Chipotle $2,000? It's $2,000 because it's got a very small float. You know, just don't buy 100 shares of Chipotle because that'll go fast against you. Looking at our poll numbers here, we asked people this morning, does GDP data come in higher or lower than expected? 47% of people think it's going to come in higher than expected. Out of about 750 votes, 32% of people think it's going to come in lower than expected, and 22% of people think it's going to come in as expected. Hey, what's up, Emmanuel? A little bit of option trades. What do you expect? I really have no idea. I'm curious to see. Right, exactly, man. Kevin gets a lot of hate. I really don't understand why. Meet Kevin. gets so much hate. Like people are mad at what exactly, you know? But yeah, again, I never really understand why Keep Meet Kevin got so much hate. People were mad at what exactly? That he protected himself from a big crash that he saw coming. Like, regardless of what he thought, like in stocks, you're allowed to change your opinion. People act like if you say one thing, you got to stick to it. Like, nah, man, the whole, like, stocks are about fluctuating, movements. Like, they're going to change. Sentiments are going to change. Catalysts are going to happen that are going to influence positions. I never understood the hate. Like, listen, he got out. He did what he was supposed to, which he saw something bad and he cut his positions. He eliminated some of that risk. That's what you're supposed to do. A lot of people just lose money and they want to blame somebody. But listen, whoever's mad at whoever for losing money, if you're mad at somebody else, you lost money, you are wrong. If you lose money, it's your fault. Nobody else's fault. Certainly not some YouTuber's fault. You got to be accountable for your own positions and not go out and blame all these random people, especially influencers or whomever, again, the FTX thing as well. Like, people are mad about the FTX affiliate thing. And it's like, bro, FTX was the third largest crypto platform in the world. Like we're not genies over here. Like, we don't have a crystal ball. We can't give you guys everything and predict the future. Nobody can. And again, traders need to start being accountable, but what happens is people lose money. They can't handle it. They can't be introspective enough to really look at it and be like, yo, I made a bunch of dumb trades. And so instead they kind of look around at who they can blame for whatever it is. But it's like, listen, if you're mad you lost money, it's your fault completely. Certainly ain't my fault. Certainly not me, Kevin's fault. And so again, start being accountable for your own trades. It'll really help your trading, to be honest. He didn't pump FTX. He was a sponsored trader by them. He was literally sponsored in an affiliate of FTX. Bro, okay, I'll put it this way. Late night infomercials, bro, pumping up fiber vitamins. Okay, you think Terry Bradshaw really uses fiber vitamins? Of course not. He just gets paid to promote them. That should be an obvious thing. Like, listen, again, you can't start blaming people who are sponsored by companies. You got to get mad at the company itself, not the people sponsored by the companies. I promise you guys, listen, I promise you, okay? A large majority of you guys at home, if FTX approached you and they were like, yo, we'd pay you this amount of money to promote our stuff, prior to all this crazy stuff happened, almost all of you guys would accept that sponsorship and get paid by it. Again, FTX was the third largest crypto platform in the world, okay? Sure, some people thought it was sketchy, but like, it was the third largest crypto exchange in the world. It's kind of like Coinbase. You can't get mad at somebody for some random like event that happens like that. It's not the sponsoree's fault. And again, I never put a penny in FTX. I never touched FTX. But the point remains, again, you got to start being accountable for your own stuff. All right, SPY ripping up here. Dollar index still breaking down. We got about 9 minutes, guys. 9 minutes before GDP data comes out. Jobless claims data today. Big day. Well, no, Bob. Listen, there's a difference between telling people to buy specific stocks or specific cryptocurrencies and or telling people, hey, I'm buying these stocks or these cryptocurrencies, as well as there's a difference between telling people to buy specific things or promoting them as affiliate, promoting a platform as an affiliate. There's a huge difference there. Okay, there's a difference between promoting a platform and promoting an individual stock, right? Meet Kevin doesn't promote individual stocks. He's promoted platforms, which is understandable, and he has promoted and he has told people what he was buying, of course. But again, there's a difference. Oh, large majority of people would, 100%, without question. Yeah, but if it's the third largest crypto exchange, it's easy to say it's shady now, Bob. But at the time, it was the third largest crypto exchange in the world, man. So I mean, it's kind of like it was on the freaking like, bro. Look at the MLB umpires. Look at the Blues in MLB, right? It was literally on their shirts. It was in the UFC ring. Okay, so again, it's easy to say, oh, it was shady now, but like nobody thought it was shady back then. Not at least most people didn't. And again, most people were wrong, but nobody really saw it coming. And again, it was the third largest exchange in the world. It was all over everything. And so again, if people are mad at anybody for accepting that sponsorship, like they're just looking to blame somebody. Anyways, SPY back up to 407s. Again, testing highs leading into the GDP data report. Now, I wonder if this price action is going to influence anything because we are moving up there. Big numbers. We are up there pretty heavily. Yeah, you're not going to get banned, Maximus. It's all good, brother. Stocks being delisted. I don't know if higher is good or bad. I really don't. Again, we're kind of in this weird nuance of it could be either one, to be honest. It could be good, could be bad. It depends on what the market is fearing more, in inflation or recession. And again, I really don't know. We got about 5 minutes, guys. 5 minutes. SPY pumping up. It's at 407.30s right now. 407.30s. Again, gold dipping down a little bit. We're going to put Tesla maybe up on the left, the SPY up in the middle, and then dollar index on the right. We got 5 minutes, guys. 5 minutes. Y'all be ready. Again, we'll see what GDP data. Again, as you can see on screen, GDP is expected to show up at 2%. Jobless claims are expected to show up at about 248,000. Yeah, y'all be careful. This could move markets a lot. Amazon's still ripping up big too. SPY making big moves. We got about 900 people here, so hey, hit that subscribe button, guys, if you haven't yet. We appreciate it. All right, SPY at 407s here. Dollar index at 101.30s. Tesla at 153.50s. Well, in a day that could have been really bad because of that, Crocs trade. We're only down $80 today, so it could be a lot worse. Market's still pumping up too. All right, guys, 2.5 minutes, 3.5 minutes. Yeah, I have no idea what I'm talking about, Bruno. I say it every day. Like I said, if I do have a catchphrase, it's I have no idea what I'm talking about. Or top 3 greatest trader ever in the world right now, for sure. Definitely top 3. Bed, bag, hold, and beyond. All the way down to 12.5 cents, guys. 12.5 cents. Again, we got 2.5 minutes here. 3 minutes, roughly. 3 minutes. Again, make sure you hit the live button next to the play button to make sure you're caught up on stream. Again, you got to hit the live button next to the play button. I'll show you guys how to do it. Again, make sure you hit this number here. Or make sure you hit that to make sure you're caught up on stream so you get the data as soon as it comes out. We got 3 minutes. Guys, 3 minutes. We got over 1,000 people here. Again, subscribe. Hit the notification bell. We appreciate it. We are going to throw this bad boy in sub-only mode. And so if you haven't already subscribed, guys, hit the notification bell. Let's get ready for the data release here. Getting all this stuff up. All right, guys, GDP data expected at 2%. Be ready, guys. Again, GDP data expected 2%. Jobless claims expected at 248. I don't know how the market's going to respond to this. I really don't. We got about a minute left, guys. 1 minute. Hey, what's up, L? All good, man. All good. Again, about a minute left, guys. About 1 minute. All right, be ready, guys. Again, expectations are 248 for jobless claims. GDP is expected to show up at 2%. 2%, guys. Let's see what we get. Again, dollar index is fading down leading into this. So the dollar index is fading down. We're going to pause this timer and get ready. We got about 30 seconds. 30 seconds. Again, the dollar index is breaking down. It's at 101.35s. 101.35s. Tesla bounced it up a little bit, but not much. Dollar index breaking down. That's generally a good sign. We can put Bitcoin up on the left side too to see what Bitcoin does from this. At 29K right now. Here's the release, guys. Here's the release. All right, here's the report right here. All right, jobless claims came in under expectations, 230,000, 230,000. GDP came in at 1.1%, less than expected on both metrics, both GDP and jobless claims. Jobless claims came in at 230,000 versus 248 expected. GDP came in at 1.1% versus 2% expectational numbers here. So lower than expected on both metrics. The dollar index is rising up big. It's at 101.40s. The market has pulled back to 407s here, but it is very volatile right now. But again, lower than expected on both metrics. GDP 1.1%. Jobless claims numbers 230 versus 248. So lower than expected on both metrics. And again, the market looks like it is fearing a recession more than inflation. Looks like it's more of a recession-fearing market. I guess with the banking drama that's gone on over the last couple of days, that the market is more so fearing a recession right now because, again, we did have lower than expected on both metrics. GDP 1.1 versus 2%, and jobless claims 230 versus 248. We're going to put these numbers up on screen. Again, hit that sub button, guys. We cover this data quickly every single day. And then jobless claims 230. All right, getting a little pop up. All right, data's up on screen. Data's up on screen now, guys. Again, hit that sub button. Dollar index is seeing the biggest gains from this here. So the dollar index is gaining the most from this right now. Yeah, jobless claims coming in lower than expected. Again, we got somewhat of a response. It's not the biggest response right here. Again, the dollar is kind of seeing the biggest upward move here. You can see it's all the way up at 101s today. Data is not good. Yeah, I mean, lesser GDP growth. But again, what this is showing is that the market is fearing a recession right now is what this data shows. So for the market to react negatively, but honestly, we're starting to bounce back. So we're pretty sideways right now. So like the market initially reacted negatively to the downside, but we're actually bouncing back. We're all the way back up at 407s right now. And so it's not like we've had some catastrophic reaction here. Market started to bounce back, just tapped 407 again. And so again, kind of mixed numbers here. Again, so numbers that go against each other. So again, higher jobless claim or lower jobless claims means more people working, better for economical growth. Lower GDP numbers means lower GDP numbers. So again, worse for economical growth, right? So jobless claims is better for economical growth. It means less people are out of jobs, more people are working, better for economical growth. Lower GDP data means worse economical growth. And so this is mixed results here. And that's kind of the reaction we got is pretty mixed, right? We're kind of a neutral reaction. Because again, while the market's going to interpret jobless claims being up or being down as positive, it means more people working, more growth there in the economy with regards to jobs. Less GDP is obviously not good for economical growth. So that's kind of where we are right now. All right, I just took a little bit off of Disney here, and again, we had entered at 97 or so we just made 40 cents a share there. So we just took a little bit more off. Again, market's stale, going sideways at this point in time. Core PCE data is tomorrow, so core PCE data drops tomorrow, guys. Dollar index just broke highs again. Dixie up there. Again, pulling back down on the market here. But of course, you can kind of see this, guys. So we are actually still green on the day. So the market is still very green on the day relative to where we were. So just to put this into perspective, because again, every time we get like a good or bad release, generally people start sensationalizing it and acting like the market's just crashing down to confirm what they wanted to believe. But again, to put it into perspective, this is where we are right now. This is where we closed yesterday. So we are still very green on the day so far. It doesn't mean we're actually going to hold it, though, because, again, anything could essentially happen here. But we're pretty far away from that. The Dixie is seeing the biggest movement over anything. So the dollar index is gaining value into all this. PCE didn't drop, Jen. Maybe Jen. But, yeah, PCE's not out. The prelim PCE might be out, but it's not the actual one. PCE drops tomorrow. So again, if you look at this, PCE data comes out tomorrow. We did get PCE prices coming in at 4.2%, but the actual PCE deflator data comes in tomorrow. So if you look at 8:30 tomorrow morning, we get PCE data. Core PCE is the big one. So core PCE is the relevant one. But yeah, that doesn't drop until tomorrow. We got one of the prelim ones today, but it's not the actual one. The core one's the big one that the whole market watches in terms of like relevancy. The dollar index still moving up. Bitcoin dipped a little bit from this data, but it's not like a huge drop yet. And so again, market's still kind of selling down. We'll see what happens. Yeah, for sure, Jen. I agree with you there. Well, I don't know if it's necessarily worse for markets. It's certainly worse for inflation problems. Hey, I'm in Houston, Miguel. What's up, dude? All right, so again, SPY just dipped down. Yeah, all good, Jen. No worries. All right, so there's a little bit more movement on the downside here. Still very far away from the lows of yesterday, though, or the previous closing price. All right, guys, let's see if we got time. Is there anything dip buyable today? Anything dip buyable? I don't know yet. I think we're up too much in pre-market for me personally here. We'll give it some time. Any earnings today? Yeah, we already had a bunch. We have a lot of them this morning or this evening. So yeah, we had a lot of earnings this morning already. We had like Caterpillar, a bunch of earnings this morning, and then we have Amazon, Snapchat, Intel, Pinterest this evening. So yeah, we'll see what happens here, guys. Again, I'll put Meta up on screen. Meta's consolidating around high, so Meta's still very strong. Let me copy this. All right, get a little bounce back up. The dollar index starting to pull back some now. But again, considering everything, pretty neutral response so far. I mean, we're down, of course, but like still gapping up pretty strong on the day. And again, we'll let it play out first. So far, sideways activity for the most part. All right, market's bouncing back a little bit. Dollar index pulling back some. Yeah, we're still pretty early in the day. Crash coming. Y'all was too bullish. Yeah, man. You know, a 1% drop in a couple days or 2% drop in a couple days really means a crash is here. I see it, man. You know. Anyway, SPY bouncing back to 406. Dollar index pulling back some. And to put it into perspective, despite gloom and doom talk, we're actually pretty neutral from when the report came out. Again, you can kind of see the report came out here. And we are right here. So, I mean, we're down a little bit, but, you know, fire's not coming out the sky or anything. And again, if you haven't already, check out one of my sponsors called Chart Prime. Chart Prime is a really cool sponsor, to be honest. They are a trading view indicator service, so you can use them in stocks, crypto, forex, futures, and they give you kind of market signals, market alerts. They don't tell you to buy or anything like that, and people just use them for trading. I love my favorite one that I've kind of fallen in love with is using a 5-minute chart for these. So like you can kind of see, I can't guarantee you're going to make money, but you can see they give you signals and alerts. They show you reversal signals. So they'll say like reversal down signal here, reversal up signal here. And again, if you just kind of track the accuracy yesterday, like look at this, reversal down, huge drop, literally called the exact top. Reversal up, nice bounce over the next like couple hours, really. Reversal down here, huge drops over all the way into the next day. Reversal up signal here, nice little bounce over the next like 30, 40 minutes. Reversal up signal here, you got a little follow through bounce. And so while I can't guarantee you're going to make money with them, nobody can, of course, and they are a sponsor of mine, and so I'm biased in their favor. $35 a month for what you get here, I think it's a pretty good deal. You know, of course I'm biased, but pretty good deal. You can also use them on any time frame. Like I like using them on a 1 hour time frame. I can also use them for scalping. And again, they can just be powerful. So like every candlestick on this chart represents an hour, right? So every candlestick here represents an hour. And this is just a small piece of what they offer too. They've got like oscillators. They've got their own version of like VWAP, which is really solid. Let me see if I can get this to work. But yeah, it just can be really cool, really powerful service. And again, for $35 a month, there we go. All right. So like, look at this here. Like, look, I can't even fake this. Reversal down, drop, reversal up, huge bounce over days, reversal down, drop over hours, reversal down, drop over hours, reversal up. You got a little pop, but we'll see. That one could still work. But again, pretty cool. Literally predicts the bottom a lot of the time. But again, they are a sponsor of mine, so I'm certainly biased. Check out the link though. If you want more information, you can get 40% off if you use my link. Right, exactly, David. David says, when everybody forecasts a crash every day for a year and the market already dropped, prep for it, it doesn't crash. Swan events happen, you know, when nobody thinks a market's going to crash. Exactly. Like, bro, it's this funny situation where it's like something that I'm seeing. And again, I'm not hating on you guys. But I've seen bears come to my chat. And again, I'm bearish in a lot of ways, okay? But like, I see bears come to my room and say the market's going to crash, the market's going to crash, and they say it every single day, right? And the market might move up, 10% over like a month's period of time, 15% or 5% or whatever. But then if we have a couple red days, like where the market drops like 1 or 2%, or we have some type of like small drop. Look at Meta break highs. Then all of a sudden the bears come out the woodwork trying to act like they were right all of a sudden. It's like, bro, y'all been saying this since the SPY was at 370s, 380s. SPY's at 407 right now, 406. What are y'all talking about? But again, I think there's a lot of ego floating around in the market, and I think people just really want to be right. And again, maybe they are right. I don't know. But I see it every day. Dollar index pop it up a little bit. Oh, I definitely have sponsors, Mail. Of course I have sponsors. You better believe we got sponsors, bro. It's Chart Prime, Russ. Of course we got sponsors, dude. I never said I didn't have sponsors. What I said is I don't sell a course. I don't charge for my content. It's all free. And so, yeah, you better believe we have sponsors. Anybody that runs a YouTube channel like mine is going to have sponsors. That's just an understandable expectation. But what I don't do is I don't claim to be an expert. I don't charge for content. There's no paywalls behind my content whatsoever. And so, like, you don't have to pay to get any of my content. It's all free. I don't claim to be an expert. I don't even claim to be a good trader. And I'm green on the year on Thinkorswim. So that's all I'll say. Yeah, the only people that really get mad about other people making money are usually just people that don't, But again, like I said, of course we got sponsors. Like I said, that's the first time we've plugged anything in the last 2.5 hours. And again, the radio's free, Radio does what, a commercial every 30 minutes? So, I mean, be reasonable. Again, I'm the only guy that will literally be like, hey, they pay me money. I'm biased in their favor, because they pay me money. And then I'll do my plug. Only guy out there doing that. Nobody else is saying that. Everybody else is acting like, it's just organic. But I try to be real with people. 100% Mario. Hey, thank you, Scratch. Hey, what's up, Tiny? Good morning. Good morning. Hope you're doing good. Yeah, check out the link in the description if you want to check out Chart Prime, bro. Eventually, these bears will be right. Well, yeah, Michael Burry has called it out like every 10 years. Or every year, Michael Burry has said a crash was happening. So even if we do crash, he's still running at about 20% accuracy. Do we really have a guy with a bunch of different accounts saying the exact same thing? Wow. What crazy. Are people really spending their time creating a bunch of alt accounts so they can troll my stream? I mean, listen, y'all let it out, bro. Let it out. Hey, it's okay, guys. Yeah, we're live every day, Brian. Yeah, you better believe we're making money doing this. Of course, anybody in my situation would be. I do know a small crash is coming in my account today, maybe. Hopefully not in mine, brother. Again, Disney, back up a little bit. We already taken profit once on this today. Yeah, when you have haters, you're doing something right. AI trolls of the future? Hey, maybe it could be. Might be Chat GPT doing it. It means you made it on YouTube? Yeah, for sure. Feels good. Look at Meta flying up here. Absolutely flying up. Yeah, I hope the haters I hope it burns them whenever they hear me. Whenever they see me on YouTube, I hope it just hurts to hear. Like, I hope it just, your stomach churns when you see me out here making money on YouTube with 1,000 people watch it. Feels good, man. Feels good. Listen, when you look this good, I mean, listen, people are going to watch you. I mean, definitely top 3 most handsome YouTubers in the world right now. And I'm only getting more handsome as the years go on, And so, listen, I hope it hurts, What's that old 2000s song? Emo song. Somebody hit me with it. I don't know what it is. But yeah, GDP data coming out. The market is actually green now relative to when the GDP data came out. You can see the GDP data came out at about 406.60s. Market's at least neutral, maybe slightly green. We're also now over the 200 EMA, which is a big level. beginnertrading@gmail.com. How much money do you make doing these? I make hundreds of thousands. Definitely top 3 most handsome. Don't hate Tay. You know it's true. Don't hate. Listen. I mean, when you look this good, I mean, people are gonna hate. That's okay. AI version of you. Yeah, listen, we got AI version of me, bro. Listen, I did these AI headshots for real estate. Let me see if I can find it. I did one earlier. Watch. Y'all want to see it? I showed people earlier. Look at this. AI John. Something's just not quite right about it, though. Like, something's just not quite right. Can you pull up the Bitcoin chart and whistle? Why do viewers care so much? They don't. It's honestly, it's probably one guy that just doesn't have much to do, who's got a lot of free time on his hands that, for whatever reason, somehow, I made him insecure in some way. And so he's just kind of letting it all out by trolling me on stream. And that's all right. Listen, again, I've said it before. I'll say it again. The way I run is like heavy sarcasm. And so if you hear the top 3 greatest looking traders, of course I'm being sarcastic. I mean, I'm definitely top 2. But same thing. Like, the only way to deal with trolls is to troll them back. And so that's why you see me saying the top 3 greatest. That's why you see me joking around, all that stuff. Some people are going to not recognize the sarcasm, but I think most people do. Meta's still pushing up. But look at AI John over here. Man, what an attractive guy. Look at this man right here. Again, these were AI headshots. And so I paid $20. They sent me about 100 of these. All I had to do was send them 10 selfies. I didn't get dressed up. I didn't do my hair. My hair is honestly kind of messy in the pictures I sent them. But here's AI John. Yeah, definitely top 3, Doug, for sure. Yeah, I don't think you're a hater, Craig. It's all good, dude. Crash, the stock is well balanced when the stock goes down. Look, this is, yeah, it gave me a little bit of age, but that's okay. We got to look distinguished over here, John, can you explain why halts occur, how they occur, and what controls them? So there's a few different type of halts. In big indexes like the SPY or the S&P, if they go down a certain percentage, I think it's like 12.5%. It might be more, it might be less. But if they drop a specific percentage in a day, they get halted. If they drop a following percentage after that, they close for the rest of the day. But then you also have volatility trading pauses, which are basically market makers halting the stock. Generally, they're for 5 minutes, and they do so in order to catch back up on orders because of really high volatility. Again, they usually do it to catch back up on orders from high volatility. Yeah, it's not quite right. Like I said, they gave me a little bit more wrinkles here. My hair's still a little messy, but it's all good. Again, for real estate, I don't think the clients are going to notice the difference. They're better than the other ones I got, though. The other ones I got, my kids were like scared of them. I showed my kids, and they were genuinely scared of them. So, yeah, it was funny. Distinguished gentlemen. Yeah. Hey, we try over here. You can't pick the suits, but you could say you want more suits. You could say you want more casual stuff. You could say you want it outside or inside. But yeah, my point is like AI. A lot of people don't understand the AI hype. Look at Meta rip, guys. Meta almost up to 240s this morning. Ultimately helping drag the market back up too. Yeah, Pfizer earnings at 9 a.m. Craig, use there's a couple of them. These specific ones were from a company called I'm not gonna give you a link, but they're called Studio Shot AI. The other ones I did where I got them back faster, but they were probably a little bit lower quality, were called Try It on AI. But yeah, look at Meta, just tapped 240s here, guys. Tap 240s. The SPY at 407s, the dollar index at 101.60s here. Yeah, there's AI John. Yeah, all good, Craig. And again, Disney, we already taken profit. Nobody remind me about Crocs this morning. I'm sure there's a lot more puns to be had there, but yeah, I'm sure there's a lot more puns to be had there. But give me your best John losing $200 on Crocs bad filled dip buy today. Give me the best pun you got for it. Top 3 puns get my favor. And yeah, look at the dollar index moving back up. It's at 101.70s. And again, guys, we're going to do another sponsored plug here, okay? This is the second plug we've done all day, and we've been streaming for 3 hours. Okay, so that's one plug every hour and a half. If you're mad about that, you can go cry somewhere, okay? Check out Top Step. If you want to day trade and you don't have that much equity, Top Step is the easiest way to get your foot in the door. Most pro traders are trading futures over stocks. The reason they're trading futures is because you can trade currencies, you can trade commodities, and you can essentially trade the S&P 500, which is an index fund of the largest 500 stocks in the world. In futures, it's called the E-mini. Or you can trade the NASDAQ, and you can do so without PDT restriction. That's why most pro traders trade futures and day trading over stocks, is because you can do so more freely without PDT restriction. If you don't have that much money, one contract in futures is $4,000 for the E-mini. If you want multiple, you're going to need thousands and thousands of dollars. If you want to get your feet wet without taking on that much risk and have a really useful test of your skill, try out Top Step. Top Step is a sponsor of mine, and so again, I'm certainly biased in their favor because they pay me money. But genuinely useful for traders, because what it allows you to do is get your feet wet in the door. They give you a demo account, and if you can hit the target on said demo while following the rest of their rules, they fund you. If you can pass their testing, they fund you between $50,000 all the way up to $150K with a 90% split. And they pay out millions in actual withdrawals from traders every year. They fund thousands of traders a year. They've been around for over 10 years now. They're kind of who all the other funded account programs copy off of. And it really is the best of both worlds, where it's like, if you lose this, which is going to be most people are going to lose these challenges because most day traders lose money. But if you lose, you're only down $140. It's about $140 if you use my link. You can reset it for $100. But if you pass it, you still keep 90% of your profit moving forward once you pass it. And so very, very useful in eliminating some of that risk, testing your skill, and just testing. It's going to help you be a better trader. And so again, if you want to check it out, they're called Top Step. They are a sponsor. Again, they pay me money. I'm biased in their favor naturally. Here's the link. Check it out. Your money said, see you later, alligator. Hey, I like it. Pew, pew. I like it. Crocamole. Hey, love it. Crocs and socks losing on stocks. Hey. Do you have a rule on bad investments you make? Like if you're down 20%, do you sell and move on? 20% is pretty excessive. So yeah, if I'm down 20%, I'm depending on what it is. It really depends on what it is though. So to give you some understanding into how I trade, like I'll buy up dips and then I'll sit on those dips for a while. And so like, it depends on what it is though. Like I never target penny stocks because penny stocks, a lot of the time, the long-term trend is down. And so a lot of them are going to go to zero, get delisted, go to pink sheets. They're just not going to be profitable to do that. But like I buy up Disney or Apple or Amazon or, whatever. I'll buy a blue chip. And even if it drops big percentages, sometimes, not always, it depends on what the stock is, but sometimes the logic will be, hey, I will bag hold this if I need to. And so, like, for instance, if I buy Disney at $90 and it goes to 70, I might still hold it because, again, the reason I might still hold it is because Disney is still diversified. They've been around for a century now, and long term, they are probably still going to go up. And so if I can hold it long enough, because I do have my TOS account's got about 40,000 in it. I've got 6 figures in buying power. Like, I can buy some stuff and sit on it if I need to, and it's not going to affect my regular trading very much at all. And so in those situations, I am willing to hold blue chips specifically. It has to be blue chips because generally most blue chips are going to go up long term. But if it's something where it's a little bit more speculative, like Snapchat, for instance, or Peloton or something like that, yeah, we drop big, I'm cutting it. But it depends on how well I know it. It depends on how confident I am in the long-term success of the company. And again, Disney gets a lot of hate, and I get it. I understand. But like, Disney owns Star Wars, Marvel, ESPN. Disney World makes $20 million a day. Disney Plus is growing. Like, they're so diversified that regardless of the hate that they get, I still think they're probably going to go up long term. John's Crocs got liquidated. Hey. Holy crockamole. I like it. News drop. Yeah, so GDP data is out already. So GDP data, jobless claims data, it's already out. There's the data right there on the bottom of the screen. And speaking of Disney, we did buy Disney yesterday. We're green about $90 plus on the day, but we already took some profit off of it. So not doing that bad. We also dip bought Bank of America and Wells Fargo. And those are both in the profit right now, doing well. What's a fair price for Tesla? It's speculative. I mean, nobody knows. I mean, we could use PE ratio in that regard. Tesla is at what, like 50 or something like that for PE? Let me see. Tesla PE ratio right now. Is 45. So in that regard, Tesla is overvalued according to PE ratio. Like, a good PE ratio is under 30. So price over earnings, again, I think if you just use that metric, technically it's overvalued if you just use that metric. But again, there's a lot more nuance to it to look at, like sector growth. There's a lot of stuff to look at. So I don't know what fair price for Tesla is. Chat, let me know what you guys think. SPY still pumping up a little bit, moving up nicely here. If who would what? Chris Wagner, who are you talking? What are you talking about? Miss which move, Tiny? Yeah, SPY moving up big, honestly. Do you look at volume when choosing a company? It depends. On long-term trading, yes and no. I'll look at like market cap. I'll look at float size, stuff like that. But it depends on the time frame. In terms of day trading, yes, I certainly look at the company. But in terms of when it comes to longer term trading, like investing or swing trading, less. I look at volume less, but I still look at it. Yeah, we're gonna put the futures contract. So here's the futures contract of the S&P 500. It's called the E-mini. It's the same thing, same price action, slightly different price, but it's basically the same thing. And again, the reason they call them futures is because to understand like how it all started. So to understand how it all started, farmers, they would grow these commodities like corn or soybeans or whatever it was, and they would grow these crops. And by the time it came to yield those crops, the prices had fluctuated so much to where their margins were getting hurt. Like, it wasn't as profitable as they wanted it to be. And so what they started doing is they started selling these contracts, locking in, a specific price for the yield of the crop, regardless of what the actual price was at the time of the yield. And they started selling these contracts to speculative investors who wanted to kind of bet on crop prices. They ended up calling these futures because it was a way to lock in price versus the future price. So it's a way to bet on future prices of commodities. But over time, again, we talked about this in the last video that we did, but over time that kind of evolved to encompass, currency. You can trade currencies in futures. You can trade commodities like you did before, but you can also trade index funds like the S&P 500 futures contract version of those, at least. And again, that's the big edge in getting around the PDT. Hey, thank you, Doug. Yeah, good luck, bro. Part of me wants to buy this little dip here. We took one contract here in the SPY, or the E-mini futures contract. And so you can see I'm up about 1250 on that contract right now. But you can see it's just like stocks: buy market, sell market, buy bid, sell ask, all that stuff. Yeah, I'm gonna go ahead and cut it. Not worth holding it. I might have lost like 30, 40 bucks. But we'll give it time to the opening bell. I like the little cup and handle trend, but again, I'm gonna wait for the opening bell to start. But yeah, thank you, Doug. Doug said, just want to say I love your channel for all the earnings and market data. Keep it up. Hey, thank you, man. Dollar index starting to move back up, so we might see some market weakness here. But again, the market's green relative to when the numbers came out. So GDP data, again, we do have pending home sales data coming out too today. So again, we do have. Let me see. It might be new home sales actually. Let me look this up. Yeah, pending home sales is today, so it's actually pending home sales. Hey, good luck, Pawn. What are your thoughts on how algorithmic trading and high frequency trading affects markets? Well, I think it certainly affects it heavily. I think over time that'll become more and more common, and less manual trading will be done. But I think it's going to take decades and decades to really, to really become like that, if that makes sense. But I think there's also, like, you can do, I think AI programming and high frequency trading and algorithms are going to take over pretty soon too. But again, you got to have good ones, It'll have some effect, not as big of effect as GDP or anything, Nick, but it'll affect it some. 1.1 GDP equals a recession. In what way, John? Recession means 2 consecutive negative GDP. See the actual definition. I don't know. The jobless claims numbers show like recession is also indicated by a drop in unemployment or a rise in unemployment. And so again, the common rule of thumb is 2 consecutive quarters of negative GDP growth. We had GDP growth. We had 1.1% GDP growth last time. So the last GDP number for the quarter, we showed 2.6% growth. And so like we had lesser than last time, but it's still not negative. And so like a recession would be if data today came in for GDP at if data today for GDP came in at minus 1%, and then next quarter it came in at minus 1.5%, that would be defined as a recession. But we're not there yet. We're still positive. It's just less than expected, and less than last time, but it's still not negative. And there's a difference. All right, then we have PCE data coming out as well. Yeah, but I mean, John, we can blame it on all this other stuff. We have to look at the actual numbers. Like that's not really provable. Like we have to look at the actual GDP numbers, not what they would have been if this happened or this happened. You know what I mean? Like we got to look at the actual numbers, brother. Yeah, and again, today we have Amazon earnings, big day. All right, market's bouncing. Meta's dragging the market up some. SPY's still green. You can see the dollar index at the bottom right at 101.60s here. So we can put maybe like the Tesla chart up. Tesla down to 151s. Yeah, so again, what V says is actually true here, which is that a rise in unemployment is necessary for that as well. And again, with jobless claims coming in lower than expected, that means more people employed. And so like that's not what we're seeing right now. Again, I'm not saying it's not going to happen in the future or whatever, but it's certainly not what we're in currently. Yeah, so we do have in terms of data coming out today. So again, we do have a lot of stuff here. So we have pending home sales dropping in about 48 minutes, which are pretty big relevant numbers too. All right, so yeah, pending home sales coming out. Dollar index is rising here. All right, guys. So got a little pop here. We're going to try to buy this dip. GDP 1.1 versus 2%. Yeah, no, I mean, it's right underneath me. Like, again, there's a difference between, okay, I want people to understand this because I see some confusion in the chat here. But guys, there is a difference between having a negative GDP quarter and being lower than expected. Okay. So again, negative GDP means a minus would be in front of the number. Okay. We can have an expected 2% and show up at 1.1%. But again, is 1.1% a positive or negative integer? It's a positive integer. And so in that regard, we are not having a negative GDP quarter. We have less than expected, sure, but we're not there yet. And I'm not saying we're not going to get that. Again, I think the Fed expects a mild recession this year, right? But we're not there yet. We're not in the recession yet. We need low unemployment. We need high unemployment and 2 consecutive negative GDP reports is what we need. And again, we're not there yet. Again, it's still a positive integer. So Tesla about to back up a little bit. Dollar index consolidating. Meta's been flying up today. So Meta had a big rip this morning. All right, so we got a nice little upward move here. And again, we are in one contract. That's if you actually believe the numbers. Yeah, I mean, I guess, man, but again, you got to look at it objectively, I think, and understand, like, you're always going to have people who are wrong about what happens. That you're always going to have people that try to predict this stuff that are wrong, right? And when they're wrong, they're going to say, oh, well, I would have been right if the numbers were accurate, or if the numbers were right, I would have been right, you know. But at a certain point, you got to look at that objectively and just say, man, they're just trying to avoid being wrong sometimes, I think. And again, maybe we do have, you know, a weak quarter coming up or whatever it is, but again, we're not there yet. And I think you gotta look at the numbers for what they are, not what they could be or whatever it is, you know. Yeah, inflation's still super high for sure. No argument there. Better than it was last year, though, but still high, of course. All right, so we're in this trade. We've been pretty flat now for a couple minutes here. I'm not gonna sit on this. I'm just gonna cut it. I'm gonna wait till the open. We got 12 minutes. Again, we're down small. We're just gonna let the open happen and then maybe take some trades there. SPY actually pulled it back to the volume weighted average price. Hello. All right, guys. Yeah, I'm not saying that doesn't happen. I think inflation's still bad. You know, I think we could pause, but I don't know if we're there yet. All right, Tesla bouncing back up here too. So Tesla getting some strength here now. All right, guys, 10 minutes, 10 minutes. Again, where do you guys think the market's going to head today? Where's the FRC doing here? I'm going to put up FRC on the bottom right. FRC is under the previous closing price. Yeah, I don't think we're going to pivot in July. I hope not. I don't think we can. Again, I know the Fed doesn't want a recession, and I understand that, but inflation's still very high. So we're in this weird nuanced market where some people are fearing inflation, some people are fearing a recession. And yeah, again, I don't know. All right, so market's starting to move up a little bit again. FRC up there. Meta still consolidating. All right, guys, 7 minutes. What will be the market reaction to home sales data? I don't know, dude. I don't have a crystal ball, brother. I really have no idea. Again, I think at this point, people are conditioned to take stock picks. But yeah, so again, I think people are conditioned to ask people like what's going to happen. Again, to put this out there, nobody knows if the market's going to go up, down, or sideways. The people who claim to know the most about what the market's going to do probably know the least. And if somebody posts a definitive statement like the market's going to do this or the market's going to do that, generally they're wrong. Again, an example is I had a guy yesterday, right before Meta earnings, say Meta is obviously going to go down and kind of shame people for thinking it was going to go up. And if you look at Meta here, Meta has had one of the biggest runs that the market has done over the last month. Meta is up to freaking 240s right now. So just huge moves. And so again, one thing that I'm very much against is definitive statements here. And again, what I'm trying to teach you guys is how to understand, how to really read the market and sentiment. Again, if somebody claims to know exactly what's going to happen, they probably don't. And my job as running a community that's targeting up new traders is to try to help them understand that nobody knows. So just be careful. Diversification is always good as well. If you've got a minute delay, Rocket, then it's on your end, brother, not mine. Every stream on YouTube is going to have a delay, but mine's nowhere near that. Yeah, I like 4-hour charts. The market will go up in the next 20 years. Yeah, 100%. I mean, that's obviously true. I'm talking about short term. The market, the biggest edge of the market is that it goes up over long term. And so, sure, Kurt, I agree with you. The market's going to go up over the next 20 years. I'm not talking about that kind of definitive statement. What I'm talking about is Meta's going to go up from earnings, or Meta's going to go down from earnings, or GDP data is going to come in higher than expected, or GDP data is going to come in lower than expected, or whatever it is. Yeah, I know it's all good, Kurt. I get it. You were just messing with me. I get it. Tesla dipping down a little bit. Market's been completely sideways heading into the opening bell. And again, we'll see if we get anything good. Yeah, I mean, that's probably true, Ty, is that some people, big money knows, but we don't, There's going to be some people with insider information, of course, but, that's not us, And again, usually, the people who claim to know the most, from my experience here running this channel, are usually the most wrong. Yeah, it's all good, Sam. I mean, like I said, it's probably a couple seconds, my guess is. Depends on your latency on your end, too. Oil, yeah, I don't know what oil is going to do. All right, SPY up to 407s. So back over 407s. Again, kind of a choppy few minutes here. We got about a minute left, guys. 1 minute. 1 minute. Still popping back up a little bit here, guys. Look at the E-mini up there at 4100s. 4100s. GDP data is released monthly. So the BEA drops the stats every month. And then you add up each 3 months to see what the quarter is. All right, market's moving up a little bit. Here's the opening bell. All right, market's dipping down a little bit at the open. Tesla bouncing back up some, though. FRC's moving up, too. Again, SPY consolidating, starting to move. Look at Tesla tap the 200 EMA here. Bro, I'm green at Disney. I'm trying to take profit. Look at Tesla rip up to 154s right now, guys. 154s. Tesla flying up here. Look at Tesla all the way up to 155s almost here. Hey, look at Disney. You love to see it. We're finally scaling out of Disney on this huge pop. We've already scaled out of most of it. There we go. Just locking in profit. Could have been a really bad day with the Crocs stuff, but the Disney swing I'm in is kind of compensating for it. Market's still pretty flat, but look at FRC rip up. I think this is good. All right, now we got less than 100 shares of Disney. Scaled out a lot of it already. Yeah, I feel you, Tiny. All right, getting a pullback here. Look at Tesla coming all the way back down to the 200 EMA. We'll see if we bounce there now. Ooh, good thing I took some profit on Disney because it fell right back down. I'm going to sit on the rest of it, though, because I can. So, again, we scaled out most of the Disney trade, luckily, before this big, huge drop. So, certainly glad about that exit. It could have been a lot worse, for sure. Saved myself a little bit there, man. SPY's still pretty sideways, though. Tesla just dumped all the way back down here. So, again, we do have pending home sales data coming out today. Well, now Tesla's in the red, but it ripped up big at the open. Yeah, I mean, John, listen, what I will say is if you continue to be condescending, you're going to get banned pretty quickly, man. You know, we get people that are, again, as I said, people who claim to know the most generally know the least. So again, all I'll ask is that you try not to be super condescending. Again, I'm not even holding Tesla. I'm not in it, but yeah. Yeah, be careful, Tiny. It's a choppy morning. I mean, the market's actually starting to bounce all the way back up. So the SPY back up here, but again, you can kind of see the range. Yeah, Dunning-Kruger effect, 100%. Hey, what's up, Kenny? All right, SPY all the way back up over 407s here. Over 407. So we're still over, like we're still green relative to when GDP came out. I'm going to go ahead and take some more off of Disney because we're still pretty green in this too. And so there we go. We cut a piece. We'll sit on the rest. We made enough from it to where we can. We're into resistance here, so I can't get in. Yeah, be careful. Microsoft, I don't know what Microsoft's doing. The SPY rip it up, though. So SPY testing highs. Microsoft could hit 300. The highs of the last, while are 302 for Microsoft. Anyone can recite information, true intelligence is knowing when to use it. Yeah, 100%. I mean, it again, shaming people for, buying up a blue chip or whatever it is, or calling people names is generally just going to kind of get people banned. You get some people who are just like really emotional about specific stocks, like individual stocks. And so they kind of use that to lash out on others. But again, you guys know me. My whole philosophy is just no pressure. I'm not pressuring anybody to do something or not to do something. I think it's just best to keep it respectful in all situations. Disney moving up again. So again, I'll probably take a little bit more off, just kind of locking in more profit as we test the highs again. Glad I didn't get too emotional and sell on that pullback. Testing highs again. Gonna cut some more here. There we go. Hey, nice rocket. Then you're sitting good, man. If you're holding Microsoft since before earnings. Microsoft PE says 31. Yeah, not crazy high, not crazy low either. So it's kind of neutral. All right, market top in the test of that testing the top of that range here. Apple up. Yeah, well, I actually kind of agree with you. I think one of the aspects of it, and I think but I think the Dunning-Kruger effect was anonymous. But if it's not anonymous, another aspect of that might be an interesting like part to look at here is that like smart people understand how bad overconfidence looks. You know what I mean? And I'm sure somebody's going to bring up the best looking trader ever, which is obviously sarcasm. But I think smart people understand. Like again, we talked about this earlier in the week, where like there's a Jubilee episode where it was like asking people to rank each other's intelligence and then having them take an IQ test. And so what you saw in that was like you saw this girl go, "Yeah, I've got a PhD. I'm smarter," and they ranked this one guy very low in the list. So they ranked this one guy really low. And the one guy that they ranked low was like, "Hey, I don't know how smart I am. I hope I'm smart, but like I really don't know." And then when it came time for them to take the IQ test, he scored higher than the girl that was like being really condescending towards him, who was like bragging about a PhD and all this stuff. She actually scored at the bottom ring of that IQ test. So she actually failed that, not failed, but she scored very low on the IQ test relative to the guy that she was really condescending towards. And so I guess the point is I think smart people go into that situation and they understand how bad it would look. They think about things ahead of time and they understand how bad it would look to claim you're super smart and then the IQ test shows differently. And I think, the people who scored the lowest on the IQ test were the ones that were bragging the most about how smart they are. And so I think that's an aspect of it. But again, I think the Dunning-Kruger effect is more anonymous. And so I don't know how relevant it really is. But I guess the point I'm trying to make is I think smart people probably understand how bad it looks to be overconfident and to overestimate your intelligence. And so they're going to take the conservative, they're going to give you the lower end, in terms of expectations, because it's always better to do better than expected than worse than expected. Anyways, Tesla testing highs right now. Market's flat most of the open, starting to test the top of the range. Tesla is breaking down under the previous closing price. Yeah, I got my IQ test taken when I was young. I'm not going to say what it was. All right, Tesla, Disney breaking highs again. And again, we bought the dip. Our average on Disney is 96.60s right now. So we're kind of slowly scaling out of this as time goes on. All right, locked in a little bit more. Yeah, that's probably a good way to put it. Is most smart people understand the risk of making predictions and they don't like to be wrong, and so they're always very careful with predictions they make. Getting a pullback here, and again, we've scaled out of a large majority of our Disney trade. In terms of like futures trading, I might buy the dip, but the problem I see right now is FRC testing lows, and I think that might drag the market down. But again, I really have no idea, and we'll see what happens. But I'm thinking about buying this dip. But again, I also understand since I lost some in pre-market, I might switch to the micro E-mini here. Microsoft testing 299.50s right now, 299.50s. Wow, what happened? Huge drop. Yeah, I don't know what just happened, but that was a big drop. Did something else drop? Let me see what news came out. Market's turning though. Well, yeah, that's what the Dunning-Kruger effect says, is the smart people understand how little they know, I guess is the easiest way to put it. All right, market's choppy again, man. The market's been in such a choppy range for the last couple of days here. It's just not been easy to trade, just kind of going back and forth and back and forth. We do have pending home sales data coming out today. Luckily, we scaled out of almost all our Disney trade. Well, it would have been a terrible L. We ended up making a bunch from it. Yeah, y'all just be careful. Market's very flat so far. Starting to look weaker as time goes on right now, but again, been very flat all day. All right, starting to get a breakdown here. Yeah, I mean, there's a difference between there's a difference between knowledge and intelligence too. I think intelligence is defined as the ability to obtain knowledge. So it's basically how fast you learn. Knowledge is what you learn, you know. All right, Disney started to bump back up a little bit here. Very choppy market right now, though, so y'all just be safe. Yeah, emotional intelligence. That's something I could definitely work on, I'm sure, you know. Tesla breaking over 155s. Meta over 239.40s. There we go, Disney. You'd love to see it. Yeah, we're going to short some now. The micro E-mini, we're going to take 4 or 5 contracts here short. See if we get a breakdown. There's 5 contracts. All right, so up a little bit in this one. We break the top of this range, I'll cut it. But again, it's just not a... Luckily, we're trading micros right now. There we go, back down to basically flat. And I'm trying to give this time, but it certainly is not like a high edge trend today. And again, it's been like this for a couple weeks now, really, like most of the market days. We've had a couple good days, but there's just been a lot of chop in the market. At least at the open. You know, if you want to really trade actively in day trading, I think you got to just wait until the first hour or two passes, let some of that chop fade out, start attacking trends. Yeah, we're going to cut it and just wait. FRC started to bounce back over the VWAP too. Disney testing those highs again. And so again, I'm holding a couple shares left. We're up about 140 on the day on Disney. I think a little bit more than that on the overall position. I'm looking for somebody to help me do shorts. I emailed a couple people. They never got back to me. So if anybody's interested, or if y'all know anybody that is good at shorts, and again, I've had a couple people who I've had a couple people who I know who I'm never going to work with. And so because they've been banned here a few different times prior, and I will recognize it's that person. So give me some, and it needs to be somebody that's experienced in this too. But I am looking to hire somebody. Disney breaking highs right now. I'm going to give it some time, but I'm going to let it work. And looks like getting out of my short was the right move there. FRC starting to pump up. There we go. Take a little bit more off. There we go. Again, we bought Disney dip yesterday. Again, the strategy of overextended pullbacks in healthy companies and then buying that dip has been very powerful to work in terms of swing trading. Meta breaking highs again or testing highs. Tesla up there around highs of the day. FRC pushing up almost to 6. I'm not looking to learn anything. I'm looking to, I'm looking to learn, but I'm looking to hire somebody to help me that creates shorts for me. Here we go. All right, we're going to take a little bit more off of Disney. Look at FRC pump up. This is what's dragging the market up. Confidence, renewed confidence in banking. Let me see if there's a catalyst for FRC right now. No, I don't see one. No, not actually shorting stocks. FRC halted at 604s right now, guys. Halted at 604s for FRC. Again, guys, remember I said FRC influences the market. This is exactly what I was talking about yesterday. FRC pushing up, getting halted. Market having a quick rebound back up from that. Disney testing highs again. I got just a very small piece of Disney left now. Again, if you're able to be if you're one of those short creators, beginner trading at gmail.com. Huge fly up in the market right now. Again, we're up so much, we're just going to start taking more profit at Disney here because we can. Huge 1, 2, 3, 4, 5, 6, 7, 8, 9 green candles in a row. Huge green action right now. Again, we're too high up there for me to buy it, but I like the move up. But again, too high up there for me to buy it. Yeah, E-mini flying up here, guys. Flying up. Wow, man. Crazy. Oh, yeah, I forgot. We're also in Wells Fargo, Bank of America today. And these are doing great. Nice. Okay, we're going to start scaling out of Bank of America, too. I completely forgot I was in these, man. Hey, you love to see it. I love these extended dip buys, man. These have got to be some super high-edge strategies, bro. I've been using these for almost a year now. Powerful, man. They just work. They just work. Like, listen, again, it's one of the reasons I'm so critical of like the doom and gloom talk sometimes is because, again, these have just been working ridiculously well. You wait for big exaggerated pullbacks over a couple days, big red action, big pullbacks relative to the previous couple weeks range. And then you just look for blue chips to buy up. You look for weakness in a specific sector. I look for stocks that I know are going to be okay long-term. You know, like Wells Fargo is going to be okay. Bank of America is probably going to be okay. Disney's probably going to be okay. And again, there's a lot of like, you know, media surrounding them maybe negatively, but like, again, these stocks are going to be okay. And again, I just wait for them to pull back heavily and I buy the dip and we ride the bounce. We just did it with Disney, Wells Fargo, Bank of America as well. I'm not going to touch small banks, but large banks I will certainly do this on. Yeah, we're going to announce pending home sales in about 2 minutes, 3 minutes, 4 minutes. Yeah, but Meta's been going up huge percentages though, XO. If you look at Meta, it's up over 100% in the last 6 months. So again, that's too extended on the upside for me to want to buy it up. I'm looking for stocks that are extended on the downside. It's one of the reasons I didn't buy like JP Morgan is because JP Morgan is very green on the year relative to like all the other stocks. It's just up too much for my taste. Like I don't want to hold it that long versus something like Wells Fargo or Bank of America that are both down on the year and looking weak. You know, if you look at Bank of America here, you know, Bank of America ripped up today. If you look at it on the year, it's down pretty big on the year. You know, if you look at Wells Fargo, it's down pretty big on the year. If you look at Disney, it's down pretty big on the year. And these are healthy companies that are going to be fine. Like sometimes you got to tune out all the bear doom and gloom talk in these and understand like long-term, these are companies that are going to be fine most of the time. Not always. Maybe they crash tomorrow. Again, I have no idea what I'm talking about, but in my personal subjective opinion, don't copy me. these are going to be okay. FRC halted again on the upside at 650s here, guys. 650s. We got about a minute left before pending home sales. About 1 minute left before pending home sales. All right, we're pulling back a little bit now. I'm going to start buying a little piece of this pullback here. See if we get a follow through, bounce up. Four contracts here, the micro. All right, less than a minute, guys. All right, nice little bounce up. Go ahead and take half of it off, and then we'll let the rest sit. Then we get a much larger bounce back here. All right, so FRC should resume. All right, so here goes pending home sales right now, guys. So pending home sales about to drop right now. Pending home sales. Expectations are 0.5%. They came in at minus 5.2%. Wow, a huge miss. 0.5% gain. They came in at minus 5.2%. That's a big drop in versus expectationals and pending home sales. 5.2% versus 0.5% expected. That's a big miss. But again, the market might like it because of inflation fears. But again, 5.2% down versus 0.5% up expectational numbers here. Again, the market might like this, though, because of, again, inflation fears. We're going to go ahead and take some more off. And the market is gapping up on this data here. We'll put the data up on screen. But wow. Surprising, honestly. We're going to go ahead and cut the rest of this trade, too. Made about 30 or 40 bucks on it. But yeah, let's see what FRC resumes. All right, so FRC should resume at 10:02. So in about a minute. In about 2 minutes, or about 1 minute, I'm sorry. Market's still moving up. All right, so let's see about the resumption potential in FRC. I think that'll influence things too. So again, FRC, huge back, move up. Let's see when it resumes here. Is a real estate collapse good for market? Well, that's not what we're in right now, though. I mean, you got to understand the real nuance of real estate, which is that the last couple of years we've been on a huge real estate bubble that needs a correction. I wouldn't call it a crash because, like, over the last couple of years, people waived appraisals. They've been getting a bunch of offers well above list price, and again, that has slowed down some. But that's an understandable thing. It's not going to sustain those levels long term. All right, there's FRC's resumption. It's at 665 right now, 669, 670s. Market's still pushing up here, gapping up a little bit. We'll see if the market breaks highs again. All right, FRC still popping up to 7s here, guys. Tesla moving up too. I get a little pullback now. Again, FRC is now sitting at 640s, but we've had sideways action over the last couple of minutes. It depends on what you think is going to happen with FRC. I think FRC is certainly influencing the market. FRC pulled back, market pulls back. FRC broke highs, market broke highs. So right now, again, I think that's what's influencing everything. And again, we'll see what happens with banking. But again, we've scaled out of both of the bank stocks we're in, which was Wells Fargo and Bank of America. Again, don't copy me. I have no idea what I'm talking about. Small caps aren't going to lag because they don't follow the market, Rocket Man. Small caps are just kind of new trader, you know, gambling, you know. Unless you're day trading, I guess you could day trade them, but investing in them is a sucker's bet, man. All right, mostly consolidation at this point in time, guys. Again, we're already out of most of our trades. I think I'm just going to let the rest sit here. All right, again, sideways action. We'll see what FRC does. But again, I think the market's kind of following it a lot. I get a little bit of a breakdown here. Again, in a very choppy range. So again, we haven't been trading a ton just because the range has just not been good, man. Again, gone up and down, up and down. We pushed towards the top of the highs. We broke that for about 10 minutes, and then we kind of stayed back choppy again. We're kind of sitting here and going chopping back and forth over and over again now. So just a, weird day. Today we have Amazon earnings after the closing bell, guys. So remember, we do have Amazon earnings this evening. And maybe that'll influence markets. Again, let me know what you guys think. Possible it does. But again, we will be streaming that later on today as well. big pop up in markets now too, but again, it's kind of a sideways range is what we've been seeing. Yeah, I mean, when I don't usually take range bound trades. So like when it's like this and it's just going up and down, up and down, up and down, it's just not really my cup of tea, if you will. Like it's just not really what I like. I mean, maybe we could attack the range, but I think we have a slight uptrend. But like, of course, nobody knows what we're gonna get here. You know. Tesla moving up to the top of the range. Tesla's a little bit heavily weighted, so we'll see if that influences it now. I guess the whole market's waiting for Amazon. It could be. You know, Amazon releases their numbers. Amazon's number 3 weighted in the S&P, so that might move stuff. And if you already if this is the 3rd plug we've done all day, so if people complain, I'm gonna start counting them just so people can't cry about, you know, doing a plug. This is the 3rd plug we're doing all day today. Again, if you haven't checked out Top Step, what we're day trading on is a platform called Top Step. They are a funded account program. So what they do is they give you a demo and they test your profitability and they test your skill. If you could hit their targets while following their rules, they fund you between 50 to 150,000 with a 90% split. And they are the most legit futures funded program in the world, paying out millions in actual withdrawals every year, funding thousands of traders a year. And again, most people are going to lose these challenges because most day traders lose money. But that's kind of the point, is that it's so much cheaper to lose one of these challenges than it is to put up the money yourself. And you got to think of it kind of like it's a paper trading account with potential. And a lot of paper trading accounts cost $50, $100 anyway. The base one's 130 something if you use my link and get 20% off. And so again, very cheap. If you lose, it's not the end of the world. But if you pass the testing, it's going to build skill, and you get 90% of profit. So if you make 10K once you're funded, you keep 9K. They keep 1,000 since they're funding you that money. So very reasonable ratio. You got to hit on the base one, which is the 50K one. You got to hit 3K in profit without losing 2K. So a 2 to 3 ratio, reasonable. And so again, if you want to check it out, again, I'll post this link. Great way to help support the channel. Aside from that, guys, market's kind of in this choppy trend. There goes Tesla popping up a little bit, so we'll see if it does anything today. But yeah, just kind of trying to be patient here. I'll give it some time to see if we break highs again today. Still holding a little bit of Disney, a little bit of Bank of America, a little bit of Wells Fargo. They're not going to let you lose all of it. There's going to be a max loss and stuff like that once you're funded too. But, the whole point is like get funded, scale down your size, and just kind of trade comfortably within the range. Yeah, just such a sideways trend right now, team. And again, we'll see what we get, but it's just not fun trading currently. Again, so we'll be back a little bit later on for Amazon earnings. So yeah, we'll be back later on for Amazon earnings. And maybe we can, fight our way out of some of this chop. But by then, but yeah, guys, y'all be safe. Good luck. Y'all be good. I'll see you guys. I don't know. We actually got a little pop in this range here. So hey, you as well, Tiny. Thanks so much, Tiny. Have a good day. Yeah, I'm gonna go ahead and close it. We are breaking out of this range, but I'm gonna go enjoy my day. We got to do Amazon earnings later on, team. So I'll see you guys then. Y'all be good.